Hey everybody, welcome everyone on Zoom. Can you guys hear me? Awesome, thank you guys. We'll get started in about 5 minutes, so if you guys just want to grab a drink real quick, and we'll see you guys just in a few minutes.
guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey, welcome everyone. Good afternoon. Welcome to Stock Sniper Trading. My name is Ron. My partner is Dave, guys. It's 12 p.m. Eastern. It's Wednesday, June 12th. Thank you everyone for joining. Welcome everyone. Thanks everyone on Zoom. Just make sure you guys can hear me and you guys can see my main screen. It's got the Bookmap on it and the three charts. And let me know if you guys have any issues before we get started. Everyone on YouTube as well. Thanks guys for joining. I appreciate everyone. How is everyone's day? How is everybody doing? We have a big afternoon. It is FOMC at 2 p.m. Eastern in about 2 hours. And then 2:30 we have the conference with Mr. Powell coming to the podium, and he'll be answering questions and giving guidance. And so markets are, markets will be volatile. So please, everybody, let's trade with proper risk management. Trade as if you know what you're doing around here. Don't be gambling. Don't be doing any high risk trading. If you are, make sure you are aware of the consequences if you do that, and trade at your own risk, okay? But I highly recommend everybody does trade with proper risk management. So welcome everybody. Good afternoon. Kosova, Mirmenjes, Mirdita, welcome. Lillian, welcome. Shaquille, good morning. Miguel, welcome. Lillian, V, how are you? Good morning. Am I going to tell you guys what happened on the field trip? Yeah, it was crazy. It was I was on the bus, the yellow school bus, going there with grade twos. We went to it's called Storybook Gardens, and it was an all-day event there. And they have a big splash pad. They have a big playground there. They got some rides for the kids, and it was all around. It was a great, fantastic day. Weather cooperated. It was really nice and sunny, and I had a great time. The kids had a great time, and it was awesome. So thank you for asking, V. I appreciate that. Mike, welcome. Luciano, welcome. Reese, how are you? I hope you're doing well as well, brother. Hope is all good. Guys, we have big week as well. Not just FOMC today, but is anybody, or is it just me, really excited for the Euro Cup football in Germany? I will be going to I'm going to Europe June 23, the Sunday, and I will be in Germany for the 24th for the game with Albania against Spain. I wish I could catch all the games, but that's the game I get to see. So, and then Friday, festivities kick off with Scotland versus Germany. So it's going to be exciting. I hope you guys enjoy that. Who's everyone rooting for in the Euros? I think France was going to win, like the heavy favorite, but they might be sitting out Mbappe because he signed that big contract with Real Madrid and they don't want him to play. So that's why England is now favored to win it. So all the politics that go on involved in football, and but if France doesn't have Mbappe, I'm not going to say that they're not going to win it, but he's a big fan. But he got big contract with Real and they kept him out. So we'll see what actually happens. But it's going to be exciting, guys. Okay, so we've got that this week, but I know you guys are not here to talk about sports. We're here to talk about and analyze the market. So welcome, everyone. Everyone on YouTube, I appreciate all of you guys for joining. Thank you. And Andy Horns, welcome. Thank you for joining. Zol Dorcas, welcome. Tony Gold, as always, thank you, guys. I appreciate all of you guys. Irk, Benyam, welcome. Bodybag, welcome. And welcome, guys. Yeah, you're going for Italy. Albania plays Italy Saturday. So we'll see what happens there. Yeah, Albania's in the group of death with Italy, Spain, and Croatia. So it's going to be a tough group in there. But they're all tough groups. But we'll see, guys. Okay, so enjoy trading, enjoy football, enjoy everything. But let's get into this. So today is FOMC. Most of you guys are aware of FOMC. You guys know what it is. You guys have seen it before. It comes by pretty much once a month. And this is a really critical one in my opinion, because it's middle of the year, it's June. We have just a couple more FOMCs before we go into elections in the United States. And this is the one that Powell was hinting at always, that there should rate cuts. There should have been some rate cuts right now, but we'll talk all about that. We'll see today. Are they going to pause? Are they going to increase, or are they going to decrease? High probability they're going to pause, keep it the same, or decrease. I cannot see them increasing the interest rates, but if they do, we have to leave that on the table, and it is a possibility that they could do that. And then how will the markets react, and how will we react with that news? So we'll talk all about that. The plan for today is we're going to do a top-down analysis. That's why I started a little earlier, so we're not rushing. So we have lots of time. We're gonna do a top-down thorough analysis on gold. We'll do a top-down analysis on Dow Jones, and we'll do a top-down analysis on NASDAQ as well. We'll do the 3 charts split like this, and then I also finally got the Bookmap up and running. I had some issues with Bookmap and all of the feeds. I still have some issues. The only thing that I could get up and running right now, and I'm in contact with them, is Rhythmic with the CME. So the only securities that I could get right now are ES, that's S&P 500, and NQ, which is NASDAQ. So I'm going to keep it on ES, which is the S&P, all the way through to FOMC. It's the broader market. Maybe that will give us a good indication of how the indices will be trading. I don't have gold on Bookmap, and I don't have oil. I don't have NYMEX yet. And I don't have the COMEX, and I still got to get CBOT. That's why I don't have Dow Jones on here. So I'm working that out with Bookmap. They had a couple issues over the last few weeks, and it affected my system here. But we do have over here on the right is Bookmap with S&P 500, which is the ES minis, okay? And then below us is the cumulative volume delta indicator over here. Right now it's showing positive 100 on S&P. This is our depth of market to the right, our current order book for it, our offers above us, and our bids below us. This is our heat map over here, showing us where there is some liquidity pending in the market below and above, which could be all pending buy orders above, could be pending sell orders, and then below us could be pending buys and pending sells below us. But we'll see when the market transacts in there and how it moves, okay? So make sure we're all clear as to what the plan is today, and we'll get into these markets. We do have some big news going on. Anyone following Apple right now? Apple is, wow, so it just took over Microsoft for market cap in the world. So that's crazy. That they're above Microsoft. There's like a big fight now. Apple, Microsoft, and Nvidia, they're all fighting for that top spot. But they just went ahead of them. And on news that they're integrating their OpenAI ChatGPT on the Apple phones and everything like that. So that was big news. It came out a couple days ago, and we'll look at Apple. Nvidia is still pushing. So post stock split, how is Nvidia moving? I believe it hit 125 today. It dipped down to 117. That was a good opportunity, maybe if you got in, but there'll still be maybe pullbacks coming back down. But with the market how it's moving right now, it's very difficult to time it, just with patience and discipline, and we'll go from there. So let's just take a look at the big names, broad names on the markets right now. So just Apple right here, it's up $10 a share right now, almost 5%. So you can see if you click on the 5-day, you can see right here Tuesday is when they announced the OpenAI right there. We were trading at 193, and then it pushed up to 205, kind of consolidated, and then going into today, just continuing with that momentum, and we're at 217 right now. So Apple is a big player in the markets, guys. I've been holding this security since 2008. I wish I bought more back then, but that's the woulda, shoulda, couldas. And I've been part of a lot of forward stock splits with Apple, so my shares have just multiplied and multiplied and multiplied, and I hope this thing can go to $250, $300, $500 a share, and then maybe another forward stock split, and just keep multiplying. And it gives you guys opportunities as well. We just had the 10 to 1 stock split with Nvidia. If you're looking to get a position and maybe hold it for 5, 10, 15, 20 years down the road, if you believe in what Nvidia is going to do, that's how you can start to do a little bit of investing on the side. Okay. Did anybody get any call options on Apple with that open AI news? Is anyone in any call options with Apple right now? So we'll talk all about these things. Okay. I'm going to move over to Forex Factory. Okay, we're going to take a look at today's news. We had some big news this morning. Is it just me on this call, or is anybody on this call? Is it just me talking to myself here? Let's go, guys. We need engagement. I need engagement. Okay, these calls are boring if I'm just talking to the computer by myself. I need you guys to be engaged. Everyone on YouTube, get engaged. Let's go. Start talking in there. Everyone on Zoom, let's go. Yeah, memes. Meme stock, yes. If you guys see GameStop right now, did you guys see they secured a $2 billion financing? And if you see, it's a very GameStop is very up and down, up and down, up and down. But a lot of people have fun with it. But it can be very tough to trade that thing. So if you are in GameStop right now, we'll see what happens. But that thing is crazy with Roaring Kitty and everything that they're doing over there. But so that's the beauty of learning the markets and trading every day. There's always something going on. Something. There's always something. The markets are never boring. Okay, so everyone is listening. Okay, awesome. Okay. So let's talk about today's news. Okay, number one, we will break down FOMC. That's over here at 2 p.m. But we had some significant news this morning with CPI. So let me just go through, walk us through London. So we had London today. It's already gone by. We had the GBP over here. So we had the British UK GDP month over month came out. The actual reading came out with the forecast. It's a little lower than the previous. If you were trading in London, in Europe, over here, that maybe caused a little bit of volatility over here. Then we started to move into 8:30. So again, we had PPI and now CPI. So there is a difference between these. Some of you guys are getting better at understanding the difference between core CPI and just your basic CPI. Again, if you don't know what it is, just click on the folder and really quickly it will tell you exactly what it's measuring, what is core, so that you're never confused and you're never guessing. So core CPI we had come out this morning, month over month. That's what the M/M is. Month over month. Our previous core CPI was 0.3%. So they forecasted for today, they were forecasting 0.3%. So no change in the core CPI since last month. The actual reading came out this morning at 8:30 and it's 0.2%. So it's 0.1 below the forecast, and that's why it came out red. Now let's see exactly what this means. So anything to do with CPI comes out of the BLS. It's called the Bureau of Labor Statistics. What does it measure? It measures, so this is core. Core CPI measures a change in the price of goods and services purchased by consumers. Okay, so you and I are consumers, wherever you live around the world, in whatever country you live. I live in Canada. You guys live in other countries. You guys are consumers. And so, but core measures everything we consume, excluding food and energy. So food and energy are pretty big. We need to eat to survive. We need energy to stay warm over here, and energy. But this reading excludes it. So that zero point 0.2, we've got a little bit of a drop in our core CPI, excluding food and energy. So what does this mean? The usual effect, actual greater than forecast is good for the currency. Now, when we're talking about which currency, you look over here, it's USD. So this core CPI has to do with USD. It might not have to do, it's not reading anything that's going on in Europe. It's not reading anything that's going on in Asia. It's reading actual what's going on in the US. So this affects the US dollar, which most securities are correlated with. So this is a good reading to help see how the markets could be moving, or other currencies and things like that. So actual greater than forecast is good for the currency. We were not greater over here, so than the forecast. We were actually below the forecast, so that's why it came out red. And it's released monthly over here. The next conversation we'll have about core CPI is July 11. And why do traders or investors care? Consumer prices account for the majority of overall inflation. Inflation is important to currency valuation because rising prices lead the central banks to raise interest rates out of respect for their inflation containment mandate. So this might tie into Powell's speech today, and that's why this was released this morning before FOMC. So we'll see how this affects FOMC. Are they going to pause? Are they going to hike? Are they going to cut the interest rates? What does Powell have to say about this? How is he going to tie all this in together? Those are the pieces of the puzzle that we need to put together in order to figure out how these markets move. Okay. And then there is some related stories. Anytime you're confused about something or want to read more or learn more, there's always some related stories. U.S. inflation broadly cools in encouraging sign for Fed officials. So this is a good article that came out 2 hours ago, and it's saying U.S. inflation broadly cools. 0.1 is cooling, and it's encouraging sign for Fed officials. So maybe this will be, we're gonna get either a pause, or I'm hoping for maybe a 0.25% decrease in the rates, just like how Bank of Canada did it last week. They cut the rates 0.25%. The first G7 country in 4 years to do that. And so that's encouraging. We want to see that. We want to see interest rates a little lower around the world, and then maybe that will ease up and help everybody out. Okay, so there is lots of articles here. U.S. Consumer Price Index shows cooling inflation in May. Okay, so remember, this is month over month. So all of this data that came out today, this 0.2%, was previous month of May. We will get June's reading here on July 11. So everything that's going on in June, we'll get all the information on July 11. So this is previous month over here. So it's telling us May has been cooling inflation a little bit. So that's good. We want to get inflation down, and then that can maybe justify some rates coming down, and not only just inflation, but we also have to know how the jobs are doing, and are they creating jobs? We saw that they are creating jobs, but actual unemployment rate is going up. What type of jobs are they creating? Non-farm payroll, NFP, that we had last Friday, is jobs not including anything to do with farming or agriculture. That's why it's non-farm payroll. So that's more of our government jobs and things like that. And they did actually create a lot of jobs, but the unemployment rate went up from 3.9 to 4%. So you have to be careful with and then really dissect and see what they're talking about. Okay, so that was this morning. Then there's more. So this was just core CPI. Remember, this reading excluded food and energy. Now the next one, CPI month over month, does not include this core. So this reading includes our food and energy, and it also went down. So we had previous month was 0.3, forecasted for 0.1, like the forecast was actually lower than the previous data, and then it actually came out 0.0% red. We're below, and so also everything is going down. Then we look at this one, CPI year over year, Y/Y, year over year. So last year at this time, inflation, or we see over here, was 3.4%. They forecasted no change year over year at this time, 3.4%, and then the actual reading came below 3.3%. Now, remember what I was saying. Is this encouraging for the US dollar? If this is going down, do you think that the US dollar would sell, or more investors would be looking to buy the US dollar in situations like this? So we see everything is below their forecast. What do you think this would do to the US dollar? Would this cause selling in the market? Yeah, this would obviously cause a little bit of selling, because if you just look at the usual effect right here, it told us actual greater than forecast is good for the US dollar currency. So we're below red on all three readings right here. So there was, if you saw, 8:30 a.m. Eastern, there was a sell in the market on the dollar. So there was a big drop, and it's still pushing down. Like right now, we're trading at, the DXY is at 104.32 right now. And then right before they released these numbers, the US dollar was trading at 105.06. So you can see it's been a significant push to the downside on this overall CPI data. Okay, so now continuing to move forward, we had 10:30. We had crude oil inventories come out today. I don't have enough time to talk about this, but if you are trading crude oil, if that's one of your securities that you trade, make sure you understand what these crude oil inventories mean when they're released. Start to do a little bit of research on this, start to do some homework on this, and start to get more familiar with what crude oil inventories these mean. It does affect the supply and demand, so it could give you a good understanding of maybe crude pricing and where they could be going. Okay, now this is the big session that we have together. So I'm just looking at time. It's 12:30. We got a lot of time because Ron tends to talk a lot, but we'll get through this. Okay, so 2 p.m. Now, before we even talk about anything, how many of you guys have traded an FOMC? Okay, please guys, let's make this interactive. How many of you guys have been part of a FOMC and understand how crazy the volatility can be? Okay, I want to talk about this because this is where traders like me and you, we blow up accounts. Okay, we're probably, everyone on this call has blown up an account or lost a shit ton of money during an FOMC or during an NFP or during a CPI or during a PPI event. Okay, these are not, if you want to gamble, that's on you. Okay, I don't care. Like honestly, I'm at the point where if you want to continue to do this, it's on you. So I'm telling you, please trade with proper risk management. I'm telling you right now that this is going to be possibly very volatile both ways. There could be a huge range candle. There could be liquidity grabs to the upside, to the downside. And if you don't take a trade right away, it's okay. There's not the end of the world. Maybe we see how everything is moving, and then you can trade after Powell at 2:30. You can trade at 3 p.m. into power hour. There's also trading tomorrow morning. You can trade the next day on Friday. You can trade also next week. Like there's always time to be trading the markets. You don't have to just jump in right away as soon as a number is released or Powell just takes a breath. Unless you have an overall direction and your stop loss is accounted for and you're giving it enough room to breathe where you're not stopped out and you're not over leveraging and you're not panicking when you're in the trade, that's a different story. But if you're just going YOLO and trying it, you only live once, let's go, let's full port, let's go all in. If that's your style, that's great. But that's not for long-term growth in the markets. That's not how you want to trade every single day. So you need to learn patience and discipline on a normal day. You need to learn patience and discipline when there's a lot of red folder news, and you just need to learn patience and discipline in general, just in life. And you'll get through life a lot easier when you're not stressed out, when you're not panicking, when you're actually allowing things to develop. Okay. So I had to say that. I'm sorry, guys, but there might be someone on their first day on the call and they have no idea what FOMC is, never heard of it, and I'm just trying to warn you. Like anytime you see like back-to-back red folders in the US, you have to be cautious. Like you had to be cautious this morning with CPI. You're going to have to be cautious here. Now, federal funds rate. Okay, so now we see at 2 p.m. a number is going to be released. Okay, and let's look at the previous FOMC. It was 5.5%. Okay, so what are they forecasting today? 5.5%. They're actually forecasting no change in the federal funds rate. Canada, however, last week had 5%. Okay, we had 5% was the previous, and they forecasted 4.75. So in Canada they were forecasting a 0.25% decrease, and an actual number that came out was in fact a 0.25% decrease to 4.75. Right now, they're not forecasting a decrease over here. They're forecasting no change. So this is now we got to think about this. The actual number could come out 5.5%, then there's no change. How do you think that will affect the markets? Let's just talk in broad general, S&P 500, the ES. How do you think, if there was a 5.5, if that's the actual number that comes out here, is that going to be, are we going to see S&P continuing to move to all-time highs and go bullish, or are we going to see maybe a little bit of selling pressure and see maybe some selling? Okay, so could the market already be baked in right now when they release this 5.5 forecast? Has the market been moving in a direction, and then once they release the number, is it going to continue in the original direction, obviously with a little bit of volatility, or is it going to start to sell? So if it comes out 5.5, the same forecast, we got to take it, and maybe we got to see when Powell comes in at 2:30 to see what he's going to say about it, and maybe that will start to move the markets, because Powell always talks about forward guidance. And okay, but another scenario is, what happens if they do decrease? Okay, they're forecasting 5.5, no change, but what happens if the actual number that comes out here is 5.25? If we see 5.25, then they decrease the federal funds rate by a quarter basis point, 0.25, like Canada did last week. And then how will the markets react? Then we'll possibly see a reaction in the market. So then we gotta see what happens there. Okay, so that might be an opportunity where the markets start to sell off. Okay, if we see a decrease in the funds rate and everything is moving to the highs, then maybe there's going to be some profit taking up there, and then could see some selling pressure. But that doesn't mean that the market is just going to dump or the market is going to crash and it's the end of the world. Maybe the market needs to cool off. Maybe the market needs to pull back a little bit, and it will pull back into another structural area of support or demand where new buyers will look to buy the market back and take it back up. Okay, so maybe we'll get a cooling effect today if they decrease here. What happens if there's maybe a 5% chance that they increase the interest rates? You know, maybe they catch everyone off guard. What happens if they go, if we see the actual number here, 5.75, then they increase the interest rates by 0.25%. Then there would be, yeah, Carlos, you said it, there would be mayhem in the markets. And then if you think you're going to trade that type of volatility and you're over leveraged, you're going to lose a shit ton of money. I'm just being straight with you and I'm being honest with you. So we don't know. This is not a time to be gambling. This is a time to just watch what's going on. If we're going to take a trade, know how much you're risking. Know already in my head and your head, if you're going in on a trade, you should already know how much you're willing to risk. I don't know how you guys traded today, but I know the snipers did really well in London and Wall Street and with the signals and doing good. Now you got to understand, you got to start to plan how you're going to trade this event. If you're up 1% right now and you're not even in FOMC, what is your plan? Are you going to risk today's profit, that entire 1%, and risk it in FOMC? That some traders do that, but understand the consequences. If you lose that 1%, then you're going back to break even for the day. How will that affect you mentally? How will that affect you psychologically? How will you continue to trade? If you're at, I'm just using a psychological number so we're all on the same page. If you're at 1% for the day, maybe you only want to risk 0.25% of that, and you want to lock in 0.75 no matter what happens during FOMC. So if you lose that 0.25%, you still made 0.75 for the day. You can still end the markets in profit and continue to trade into tomorrow or later this evening. Another thing is, maybe just sit back and relax and just see how the markets are moving and keep your profits. You know, like we all want to continue to compound and get more and more and more, but maybe this is not the best scenario or situation, okay? But that's all on you. These are things that you'll need to figure out on your trading journey. It took me years to figure out this myself for myself. So I'm telling you guys, this is important. I'm not here wasting your time. I've took 30 minutes right now out of this session to explain how important it is. Like everyone asked Dave and I at Stock Sniper Trading, how can we be a long-term trader? How can we do this for more than a year? Well, then you gotta learn right now what we're trying to teach. You cannot gamble in every single one of these events. It's not like UFC, a pay-per-view event, and you can go all in on these. And unless there are some traders that have a little secondary account, and that's their kind of their little gambling account. Some traders have it like their beer money account, you know. But that's one that they risk 10%, but that's what that account is for. There's not their life savings in there. They might have a little bit of money in there, and that's their fun account for these events. But don't be using your compounding account in situations like this where you're over risking and over leveraging, because then everything you built for the last couple months, maybe you went like solid 6 months and you've scaled your account, and then just continue doing that. Don't risk it all on these events. There might be so much better liquidity to trade once all they release these numbers, and then tomorrow the markets might trade beautiful. Right now it's going to be hectic, so just be careful on this, okay? So let me just talk about what this federal funds rate is real quick. It comes from the Federal Reserve. So some of you guys are familiar with the Federal Reserve. Do your history on this too. Figure out when the Federal Reserve, when they made it, what it means, why it was created, and things like that. Maybe that will give you a little bit more understanding as to what this does. What does it measure? Okay, so we're talking now just numbers, 5.5. What does this actually mean? What does it measure? So interest rate at which depository institutions lend balances held at the Federal Reserve to other depository institutions overnight. Again, this usual effect, and I'm gonna emphasize usual effect, okay? Just because it says usual, that doesn't mean that this is gonna always happen like this. I've seen crazy things in the markets in my day, so I take everything with a grain of salt here. So an actual greater than forecast is good for the currency again. And which currency are we talking about? We're talking about the USD here. So if we see an actual greater than forecast, so if they hike, if we see it go up to 5.75, they are telling us that that's actually good for the US currency, okay? And what happens if we see it go down? So if it's a quarter basis point below, 5.25 maybe we'll see it red. So then that won't be as positive for the currency, okay? It's scheduled 8 times per year. That's why we have to take this serious. Every time we get an FOMC event, it's 8 times per year. That's it, okay? Our next one will be July 31st. Why do traders or investors care? Short-term interest rates are paramount factor in currency valuation. Traders look at the most other indicators merely to predict how rates will change in the future. Okay, and if you're not aware of what FOMC stands for, it's a Federal Open Market Committee. Okay, and we can see that they haven't changed for a long time. Like I'm just looking right here. November was 5.5, December 5.5, January 5.5, March 5.5, May last month 5.5. So we'll see, and they're calling for just 5.5 again. We'll see what it is. Here's some related articles now. What to expect from the Fed meeting. If you just want to read real quick, the Federal Reserve is expected to keep interest rates at a 23-year high for the 7th consecutive meeting today. Just trying to read these. This is like after everything. Read these or read before. Like this was released 5 hours ago. You could have read this while you're having a coffee and just start to get a little bit more understanding of what's going on. Okay, so that's number one. Will come out at 2 o'clock. We will see right here an actual number. FOMC economic projections. There's no like real data that will be released, but what it is over here, the report includes the FOMC's projection for inflation and economic growth over the next 2 years, and more importantly, a breakdown of individual FOMC members' interest rate forecasts. Okay, so and then this one right here, statement. Like we will 2 o'clock we'll get the actual number. These economic projections and statements, you can see we're not measuring anything. Those are like summary notes if you can get a hold of those and read those. Then over here at 2:30, okay, so now for the first 30 minutes there's going to be volatility, and then at 2:30, maybe not exactly right at 2:30, maybe a couple minutes later, because now Powell, he normally is fashionably late, so he might be a couple minutes late, but he will come to the podium. He will show off his tie, and I believe today he's wearing a blue tie. What is everyone's calls? We said purple for a couple FOMCs, and he's been changing it on us. So I believe today Powell's gonna go blue, baby blue color, like not the North Carolina Tar Heel blue, but just like a nice. What do you guys think? Dark blue, light blue? Are we talking purple? What do you guys think tie color? This should be on here. Like we should have previous. This should be like we should have this as a folder. Previous Powell tie color was purple last month. What are we forecasting? I'm forecasting that he's going to have a blue tie, and then we'll see actual tie color over here. And and that just, we should do that, like they should have that just to ease tension in here. Dark blue, I like that, Mike. We might see that. Oh, Patrick, he might surprise us with a yellow. If he surprises us with a yellow, like that has not been done in years. That could shake up the markets if he comes here with a yellow tie. But Papa Powell, okay, he's everyone's uncle. He's in control of the printer. Okay, so we got to listen to what Uncle Powell is telling us. This is where he comes, and he will now justify this number. So whether it's 5.5, whether it's 5.75, or it's 5.25, whatever it is, he will justify why they came up with that, where that number came from, and then he will take some questions from the audience. And normally he dances around all of the questions. He doesn't. That's what these politicians, they're paid to do. They're paid to dance and around all the questions. They won't give you the real hard answer. They play games, but whatever. We know that they do that. Then the next thing is what I'm listening for, what you guys should be listening for, what everybody should be listening for is forward guidance. What are they like? Like I said, this might be all baked into today's pricing. We are traders that trade into the future. So I want to know his forward guidance, so I know how to trade the markets tomorrow. I know how to trade the markets next week. I know how to trade for the next month until we get the next FOMC conference. Okay, so if you're on the call with us and you're not listening to the actual Powell speaking, after the call, it's about a 30-45 minute conference. You can listen to it later this evening. listen to it tomorrow before you start trading, and just understand how he's directing the markets, because he is a big influence on the US dollar. Okay, they can turn the printer on, they can turn the printer off at any time. So this is the gentleman who does it. So we have to know exactly what his intentions are. Okay, and then later in power, then after that 3 p.m. comes, and that's power hour. Now we have the last hour of trading into Wall Street close at 4 p.m. So that could be volatile as well. There could be an engineered move there. If the market's dumped, maybe power hour it kind of retraces back up, or maybe just a small pullback and continues to go in the direction. Be careful trading power hour as well. That's when we're going to have to end the call, is just after 3 p.m. Eastern. I need to go grab my kids at school. And then over here, 3:15 in Canada. I'm in Canada. I see a red folder. Bank of Canada, Governor Macklem is speaking. I can grab those notes after and see what they're saying. But that's pretty much this afternoon. And if you're trading later this evening, you have your Australia, Sydney, Japan, Tokyo session over here, and you got some Australian red folders at 9:30 p.m. Eastern on the Australian employment change and employment rate. So we're seeing a decrease. They're forecasting a decrease in the Australian unemployment down here to 4% from 4.1. We'll see how this affects the Aussie, and we'll see how the markets react to that. Okay. I'm not gonna real quick to prepare you guys for tomorrow morning. Make sure you guys know 8:30, like you saw today, we had CPI. Tomorrow we have 3 red folders, and they're core PPI month over month. And again, what does core? It excludes food and energy. Okay, we'll see what this is now. Not to do with consumers, but this is with producers, PPI. And then you have your regular PPI month over month, including over here your core, which is your food and energy. And then we get our our unemployment claims every single Thursday morning, week over week. So last week was 229,000 unemployed individuals in the U.S. seeking employment. They're forecasting 4,000 decrease. So less individuals this week are applying for unemployment. Not a significant number, but we'll see what the actual number is. Okay. And then tomorrow afternoon, we'll be back on the call. We got our 30-year bond auction right here at 1 o'clock. So you can see how everything is kind of tied in. We had our 10-year bond auction. We had a little bit of CPI. Then we got FOMC. Then we got PPI. And then they go to a higher time frame bond auction to the 30-year. So when you're putting these pieces of the puzzle together, short-term bond auction is early, the 10-year. Then they start releasing some CPI data. Then we get into our interest rates, overnight lending rates, and then we get into what are our producers doing, PPI, and then they top it off with a 30-year bond auction. So this is how the markets operate. This is how they work, guys. Get to know more and more, and keep learning. Okay, so that wraps up Forex Factory. Fantastic little free website. It's not Bloomberg. It's not got all the bells and whistles. You're not paying $2,000 a month for this. It's free. We're ghetto. We like some free stuff. So this is good to use unless you want to invest in a proper news platform and you want to pay $30, $50, $100 a month. If you can budget that, that's great. You'll get absolutely more information. But if you're just looking for something free and relatively has a lot of good information, Forex Factory. Okay, moving over to earnings real quick. Today, right over here, pre-market Wednesday before the open, we had a couple corporations. I look again for those bigger names. Let's see in the after hours, do we have any big names in after hours close today? Right after all of this craziness, we've got Broadcom, Dave and Buster's Entertainment here. And so not much going on. And then going into tomorrow morning, we've got Signet Jewelers. Again, no big names tomorrow morning. And then after hours, make sure tomorrow you are aware. I'll go over all of this tomorrow. I don't want to waste time now. But we'll talk about Adobe tomorrow in the after hours, okay? And now, before we get started, thank you everyone on YouTube. Thanks for all the engagement. I appreciate all of you guys and everyone on Zoom. Okay, thanks for tuning in. Let's get to work, guys. Everyone on YouTube, there's pinned at the top of the YouTube a free Telegram channel. It's this one right here. Highly recommend you guys join it if you're new here. If you haven't joined it, please join this. We show exactly everything we do at Stock Sniper Trading. Here was a Scalper Pro buy before CPI. Right over here looking, and it was a fantastic buy signal. If you took it, congratulations. If you didn't, no worries. There will be another signal coming out. Don't worry about it. Okay, don't get stressed if you miss something. I don't. I miss a lot of trades on a daily basis. I'm a scalper. I miss moves all the time. But I'm very disciplined enough to understand that there will be another move. There will be another trade. It will come. There's always opportunity. You can't just get caught up if you miss something that it's the end of the world. Don't worry about it. There will be another time. Okay. This is our scheduling. So this was today. We had London market open with Shahab. We had New York with Dave, and then this is our live FOMC. Our Scalper Pro is going over here. And we show before and afters what we're doing in the Discord, in our Zoom. Beautiful sell right here on the 1 minutes on GBP USD. There was like the push down, pull back right to that resistance, then continue to drop. Beautiful signal right over here with Dave. Excellent. GU sell smoked like right here. Beautiful. Right below that neckline, got that consolidation, then that dropped. Excellent. And there you can see the volume profile. Nice big volume on that drop. Okay, it wasn't on light volume. That's why I've got that nice push down. Okay, so everything is available here. If you want to join Stock Sniper Trading, join us at stocksnipertrading.com. Okay, now, before we get into the charts, Apple. Let's just take a look at Apple. Okay, so Apple. I love this thing. It's one of my babies over here. Apple. It's been very good, good security for long-term growth over here. They had announcements about integrating their Apple Intelligence. So we're getting a good positive market feedback here. Investors are loving it. It was released right over here on Tuesday, where we were trading at 193. Just above $200 was the previous all-time high. So we kind of shattered that all-time high now for Apple. It kind of got up to 205, consolidated, and in market open today just took off again to 217. So that's a new all-time high up there. Yes, there might be a little bit of a pullback due to this big move, but it might just pull back and continue driving. Who knows? But careful trying to short Apple. Also, another big name some of you guys are familiar with is NVIDIA. Okay, so they just did a post. They just did a 10-to-1 forward stock split. So they were trading around $1,200 per share. They did their 10-to-1 on Monday, and it reduced the share price down here to $120 a share. There was a little tiny dip to 117, and it was gobbled up real quick. And we just have been moving up to 125. Yeah, like right here was there was the 117 dip right there on Monday. Yeah, there was that dip to 117 when it opened, and then we pushed back to 122, 123, pulled back again to 119, and then took off. With today's market news, who knows what's going on, but we're at like 126 a share, up 4 or 5% over here. Again, if you're waiting to get in and start a position on NVIDIA, it's a game of patience. If you're looking to get back in at 120, maybe we got to wait for it to pull back. Maybe it doesn't reach 120. Maybe it starts building off of 123 and continue, and then we're moving up to 128, 130. It's tough to. But if you're a long-term outlook, then you can scale in slowly on pullbacks. You don't have to time it exactly perfectly. If your horizon is you're looking to invest in NVIDIA and hold it for maybe a couple years, maybe 5 years, 10 years, does a dollar here and there really matter? So don't, unless you're scalping, you have to time the market properly. But if you're looking to start a position and hold, yeah, there's going to be some pullbacks, but don't go all in. Start to like if you have, for example, $1,000 you want to put in, you don't got to go all in with your 1,000. You can slowly buy at a slowly buy, maybe 25% here, and then maybe another pullback 25. If you know that you're going to hold this thing for a long time, okay, so maybe the dollar doesn't really matter, but it depends on your outlook. Again, that everyone has different outlooks in the markets, so you got to know what's best for you. Okay, so let's get into this. It's almost 1 o'clock, so I can get these 3 charts done, top-down analysis. I'm going to aim for getting them done for about 1:45. Then we'll take a quick little 5-minute break, washroom break, snack break, smoke break, do what you got to do, and then we'll come back and then we'll get ready for the actual FOMC, okay? And if you're just joining us, this is Bookmap. We have it on S&P 500, which is the ES. Broader market over here. I also do have NQ, which is NASDAQ, we can take a look at, but I like to keep it on just S&P for now, and we'll watch everything. So what we're going to do now is we're going to do gold, US 30, and NASDAQ top-down analysis, and we can get into the markets, okay? So where's everyone from? I'm just going to drink some coffee. Where's everyone from? Stock Sniper Trading is London, Ontario, Canada. We're about 90 minutes away from Toronto. Where is everyone from? TG, Poland, welcome. Poland in the Euros. Sweden, Mohamed, welcome. Patrick, UK, but born in Kenya, welcome. Botswana, Colombia, Miguel. Dominican Republic, Grisel, welcome. I love the DR. South Africa, Thuzme. Where's everyone from on YouTube? You guys can share where you're from too. Don't be shy. Ricardi, USA. Nothing wrong with that. Cornell, Romania. Nice. Bucharest. Ricardi, born in Brazil. Poland. We got a lot of Polish traders. Welcome. South Africa. Yes, in the house. Switzerland. Nice. They play Saturday. Switzerland. UAE. Colombia. Okay, awesome, guys. Great. I love the engagement. We got people from all around the world. Papillion, Canada, welcome. Which part of Canada are you from? Okay, so let's get into this, guys. Yep, Baltimore Tony, I know that. Okay, so we'll get on gold. Gold is creeping back up slowly, maybe up to this resistance, 23.41. Might be maybe a potential another sell coming up. Maybe they take out these highs. Maybe there's a liquidity grab, then a drop. But we'll go higher time frames and then we'll get down to lower time frames. India, yes, welcome India. I'm very familiar with India. I have a lot of Gujarati students in my rental properties. Fantastic, smart students. I love these guys. Great kids. They're learning how to trade and they are doing their civil engineering at the local college over here. Very smart kids. Bright future we got. A lot of smart kids. Okay, guys, so let's get into this on the daily. Okay, so not looking to scalp the markets right now. I'm going to break things down on the higher time frame. We're going to go daily, we're going to go hourly, then we're going to bring it down into the 5 minutes, and then we'll do all 3 of our securities, and then we'll get everything lined up till about 1:45, and then a quick little break, and then we get ready for FOMC. Okay, so just if you're on YouTube, please, if you guys can, I don't want to always remind you guys, but if you're actually getting good value, if you're getting good content out of this, you're learning a little bit, hit the like button, please, guys. Subscribe to the channel if you haven't already. It does help with the YouTube algorithm to maybe reach out to other traders who are looking to learn. Okay, we found you guys found us by having individuals hit the like button, share the channel. So let's pay it back forward. Maybe there is someone searching right now what is FOMC and has no idea and maybe wants to join the team, and we can help them out, and just like you guys can help them out too. Okay, we can build this and become the best trading community. That's the goal for the next few years, and we need everyone's participation and help on that. Okay, Najal, can I ask you to turn the music down a tad? I have no music on. I wish I had music on. I don't know where that music is coming from. If you guys want, I can put music. We can make this into a disco. We can start dancing if you guys want. It's up to you. No, I'm just playing. How about we do that? Disco and pips. We'll have a disco ball if we get some pips. Um, no, no disco here. We get serious over here. Disco is after. Discos are for after. Okay. Um, but just a few things, just off topic before we get started. Um, Dave and I are looking to maybe open up a hookah lounge. But there's a lot of licensing and things like that where we are to do that. But we're looking to get around that, and it would be cool. It would be like a disco lounge, and, not a disco lounge, but a hookah lounge, and it will be like for locals that want to learn how to trade. We'll have monitors there, can come chill out, and can teach you how to trade, like hands-on, in person, and things like that. But maybe that will be something for the future, and something I'm looking forward to do that. But that's just another thing, maybe in the future. Okay, so let's just talk about gold now. Okay, so just zones. Let's just start off with some zones. Okay, number one zone I'm going to place on my chart, whether you have it placed or not. I'm going to do it for myself. The reason why I'm placing a big red box up here, okay, it's to tell me or to give me a heads up that previous all-time high of gold came in there 24.30 and got rejected, came back in that red box, they rejected it, they pushed it down, and you see over here we're not breaking now any new lows. So this is where I'm going to draw a little bit of a supporting area, turning into demand and bringing it into the future. Okay, so I do tend to bring things into the future, because these are static areas, and the only thing that's variable here is the volume moving up and down. If we close above, then I flip the box to green and I see if it will hold as support, and then maybe we get new all-time high. If we close below red below this green box, I flip the box green to red, because this could be now a order book flip where this could turn from an area of support to an area of resistance, or vice, like an area of demand to an area of supply. And then maybe we're going to start to push down where to this next zone right over here. You can see when the market kind of consolidated, tried to sell off here, but it couldn't break right here. So we can see that in the past. Price action, kind of, we look in the past to see what's going on in the present, and maybe where it will go in the future. Okay, so candlesticks are a language, just like if you're learning any language wherever you're from. This is a language. So these candlesticks are telling us something. It's up to you and I to decipher what they're telling us and where they could possibly move. Okay, so first thing I see is, now we have a big area of supply up here. That was and then just right over here, the new all-time high was Monday, May 20. We broke out of there. Okay, it was a nice big bullish impulse candle breakout on the daily, right up to 2,450, that nice psychological area. And then it got rejected and we came back. We closed back in this red box. It came up again, lower high, tweezer bottom low, close as an inside bar. Then over here, Wednesday, May 22, we came up again, lower high, then they kind of flushed it down. We pushed down, pull back, again, kind of consolidating. Then we started to move back up. Then we had this huge red candle Friday, June 7th. Did anything happen on Friday morning? Do you guys remember anything big in the markets on Friday morning? NFP, non-farm payroll. Okay, so it was good for the US dollar. They created a lot of jobs, and US dollars correlated with gold. So there was a sell on gold coming all the way down to our existing green box from the past, from early May over here and early April. And now, okay, just by looking at that big red NFP candle, what I'm going to do is I'm going to locate 50%, kind of where's 50% of it, and I'm going to use a yellow line. Okay, so half of that candle is probably right around there. Okay, I'm going to adjust it, I'm going to fix it, but if I'm just looking at half of it, just from where it opened, 2,375, to where it closed, 2,293, half of it is maybe like right around there. 23, 37, 36, 38, 40, just in around there. Now I'm going to figure out where to place a zone here. I like to look at also now the structural candlesticks in around this yellow line to maybe see if I get more touches and real actual critical data. So I can adjust this line, maybe if I want to bring it maybe up to here where I get a body touch there, kind of those bodies, these bodies. Maybe I'll bring it down a little lower, like right there. Then I get these bodies, those wicks, these wicks, that body, those bodies that pulled back right in there. So we're trading right at that yellow line right now currently as I'm speaking. So if I'm looking for a zone above this area to follow with this bearish pressure that came down on NFP Friday, now I look to make a little zone above it. So I use kind of the yellow line as a guideline, and then I look at some type of structure to the left of the chart. So I see like right there, maybe I grab those wicks that kind of traded into they broke out of that yellow line, they traded right into there and pushed back down. They traded a little higher in there, pushed back down, traded in it again, and then pushed back down. If I continue with this theme and I bring this box across, I kind of get that body right there, that body. Yeah, there was these barcoding, green, red, green. So it's not the greatest in here, so that's why you can't get a good exact reading of where to place a box. So I'm just going with some critical areas in the past. Now what I do is I stretch this into the future again. Okay, so I can see today now we traded right into it, so that's our high of the day up there, and then we we're right here, so we're close to the high of the day. Let's see if we maybe break out of this red box, and if we do get a gold push out of here, then where could we go? Maybe our next area could be these bodies, how they line up with these bodies. Okay, remember we're going to go lower time frame, but I'm just looking for some daily point of interest. So I'm going to place a yellow line right here, 2361, 2362. Who knows, maybe we fill up right up to that yellow line. Maybe then there's a possible resistance right there. Maybe we pull back. We see right here where it came up those 3 days right into there, pulled back, came into there again, pulled back. We actually closed above it the day before NFP, but then they brought it right back down, and now we're retracing right back up to the 50% level. Maybe it might extend a little higher right up to there, and then if we do continue to push and go higher, maybe up to those two bodies right up there to 2375 or 76. So I have a yellow line right up here. Okay, and then if it continues to move up, maybe we'll break that NFP high and then come right up to those bodies right there at 2392. So I'm just getting my daily point of interest levels if gold is actual bullish and we move up here. However, what happens if we start to push down and then it starts to sell off a little bit? Where could we go? Do we have support below us? Do we have any significant volume to look at in our candle already? There's less than 4 hours to go on this body, so we still have a lot of time. Now what I do is I just look at how we started the week. So Friday was the big sell-off. Look at tweezer bottom lows. Look at Friday's low and look at Monday's low. Equal lows. This could have gave you a clue if you're a swing trader to maybe look to buy this higher time frame area of demand. You got your tweezer bottom lows. That helps confirm a move. We talk about this. So that's equal lows. So just psychologically, the market never broke down. It didn't create a new lower low. It's a equal low. So you psychologically that changes the entire depth of market when that happens. And then you see that we're coming up on a 3-day uptrend. It's making higher highs, higher lows, higher highs, but we're now trading right into the heart of that 50% level on that big NFP sell-off. Now, so if I'm looking at it, this could be like one leg that came down. Now we're coming right back up. Is this going to be the neckline in here? Will it be the neckline and then maybe we retrace back down a little bit, and then maybe will it be a higher low and then we continue moving back up through there? Or is it going to come all the way back down for like an actual double bottom and then we move back up? You can see maybe that's going to be like our W. Maybe we break out of here, we retest this, then we're driving. But that's multiple days. That might be like development. So right now, if we pull back on today's candle, now let's break down today's candle. How did it open and yesterday's candle? So Tuesday yesterday, we opened red. It was red, red, red. Did we trade into 50% of it? Yes, we did. We broke a little lower, but we didn't take out those bodies. We didn't take out the tweezer bottom lows. So they did create a higher low here at 2298, right at 2300, that psychological level. We did come back. There was some good buying pressure coming back to close out. We made a new high. We took out Monday's high and we closed relatively close to the high of the day at 2317. So this is a bullish pin bar candle. Then the next day today we opened. It was initially bearish where gold sold off right there to, you see the body where we opened and this body right there. So I'm placing a purple line to let me know that that's today's low of the day, 2310 on gold, purple line. And we're continuing to push. We came back where we opened and we took out yesterday's high, okay? And we're continuing to push all the way up to, that was today's high of the day, roughly 2342. So I'm placing a high of the day purple line marker right in at that red box. Because that's kind of roughly 50% of that red candle in there. So they are pushing it down. Now, will gold continue to come right up to our purple high of the day and break out a little bit? Yes, it can. Will it fill all the way up to 2362? Who knows? We've got big news coming. Maybe it just goes a little bit, trades inside here. Where could it trade up to? Now what I do is I look from the top of the red box to that yellow line, and then I start to look at the structure in between here. Where is a location that I can place maybe another yellow line, and not just by guessing, by actually getting some touches. I like this area right here personally. Why? Sorry, not purple, yellow. And why here? Because you got a body right there. You've got this big green candle that was green, 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 right at that yellow line, got rejected, came back down. Here we closed with a green body above the yellow line. Here it came red, 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 right at that yellow line and respected it and went back up. And then you can see how these wicks were getting rejected at that yellow line. We closed above it here, maybe a pullback still holding it, push up. So maybe here, this is going to be, if it drives from 2344 and comes all the way up to there, maybe there's going to be some resistance here at 2352 before we can make that big move. So I'm just getting my zones. Remember, I don't always look for 300 pip moves. I look for 50 pip moves, 30 pip moves, 75, 100 pip moves. So I got to know where my levels are. What happens if we, so today guys, overall, let's do this as a team. Overall on gold. Is gold bullish or bearish on a monthly? Like monthly now. Think about what month are we in? We're in June. Think about May, think about April, think about March. Is gold bullish or bearish? This is not a trick question. Okay, bullish, obviously. It should be all bullish to you guys, because if you see over here, we started this bull run in March, consolidated, new higher high in April, and we pulled back down in May and it created a new all-time high, and we pulled back right back down to here support. So overall, gold is bullish, okay? Monthly. But remember, we're not trading on monthly right now. So now we got to break it more down to weekly. What is weekly? Okay, so weekly. Now when I look at it on the weekly, maybe I'm going to look at how it was trading last week, how it's trading this week. If I just look from over here now, so the middle of May, I can see when we took the all-time high, let's follow these legs down. It came down found some support right here, came back up. And then the supply was still there, lower high. They pushed it down, they created a new low, and then it came right back up, very strong, but it's still lower than the all-time high over here. We had NFP, big bearish move coming down, and now we're coming right back up. So it's kind of neutral, to tell you the truth. Like, if you ask me what I think is going to happen, it's hard to say right now, because you had the NFP big red body and we are trading into it Monday, Tuesday, Wednesday, right at FOMC, right at the neckline. So this is where maybe, like me now, how my brain is operating, this is maybe where I got to take it easy on FOMC and watch after FOMC how it closes, where they close the daily candle. Is it closing above here? Is it closing back below here? Is it creating a neckline? Or are we trading up here, or are we trading down here? Then I'll know then maybe the double bottom here, maybe I'll know maybe the double top up here. I'll start to make more sense of it. But yeah, there could be some quick little scalps here and there, but overall it's hard to say. If I look at last week, the end of the week, there was a big sell and then it picked it up. So we're strong this week. This week, Monday, Tuesday, Wednesday, on the daily candles, we're strong, but we're trading right into the heart of that resistance. Yes, we could continue pushing up, but then I'm going to watch how these daily candles close. Are we closing above here? Will I be able to flip this red box green going forward, going into tomorrow, going into Friday, going into next week? Or are we closing back below here and then it's still red, and then maybe we're going to start to sell back down into here? Okay. And another thing, what I do is now to dissect today's daily candle. Okay. So remember, we came up to the high. So if we come back down now, if it comes back down red, 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 how far down red could it go? So I judge with today's volume right here, open, and where the volume is. I look at where's 50% of the candle. Right there. That's about half of it, right? Where we opened and where the volume is now, that's about half of it. But I can see that there's a body there, a body there, a body there, and a body there, and some bodies right there. So maybe I'm just going to come and get more touches right there. So I touch there, touch there, touch there, touch there. I got that wick, I got that wick, and I got that wick. And you can see roughly how it's about. Well, now the volume is moving a little bit higher, but if we retrace back down, if it comes red, 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 I expect to see support hold right here around 23.25, that quarter marker, that 23.25. Okay, if I want to draw like a little bit of a green box in there to maybe give me a zone, I look above the yellow line right there. There's those two bodies, and then maybe I do the same distance below, and then I create my zone, but I make it green because I'm going up with today's volume, and then bring it across. And now you see how I gave myself a little like demand zone. Will it tap exactly the yellow line? I don't know. Maybe we'll tap a little higher, maybe we'll tap a little lower. So you can see it's about 20 pips above and 20 pips below. The marker, the yellow line, is around 23.26, and then I got 23.28 above me and 23.24 below me. So 20 pips above or 20 pips below, give or take, in that zone. If we pull back, maybe that's where the buyers. If we can't hold, then gold might sell back down, right down to where we opened today and where we closed yesterday at 23.16 or 23.15. And if we can't hold our opening price, it's got a high probability we'll come back down to the low of the day and break, and maybe gold will start to drop down into, again, 50% of this green candle at 2302 or 2300, that psychological level right there. Okay, and then if it can't hold there, probably going to come and test where these bodies opened, and then we might be trading in our big green box if gold comes back down, and that might be a bottom opportunity to buy. Okay, so gold is bullish right now. Let's go down to the hourly real quick. Holy, it's 1:15. Okay, Ron's got to start cooking now. Now we got 30 minutes. I got to do NASDAQ and US 30 and finish gold. Okay, so I got to get moving over here. On the hourly, look at how gold was just consolidating from Tuesday. Look at this. Why? Because the market is waiting for the CPI data this morning. There it is, 8 a.m. Remember what we were talking about? The US dollar sold off. lot of momentum in gold. You got that big bullish candle. Did you locate 50% of that big bullish candle at 8 a.m.? Hopefully you did. And then see the pullback. So we made our high of the day at 9 a.m. Wall Street. It pulled back all the way down into, and you see where the volume closed? About 50% of that big bullish hourly candle at 8 a.m. Then the 11 a.m. we had a nice big bullish push, and we're driving again to try and get up to that high of the day and break a little bit. If you look on the RSI on the hourly, there is a little bit of bearish divergence. You can see that if it takes out another high, the strength is decreasing, but that doesn't mean that gold's going to drop. This thing could still stay strong up here and continue moving. So you have to be very careful if you're thinking of short selling right now. Okay, we've thinned out the volume, pretty thin on the volume right now, last few hours, because we're getting ready for FOMC. Hourly candles, if we kind of see maybe a candle close below this yellow line, retest this, that might be the hourly sell coming back down to test this 23.25 box. Maybe that's where the buyers are to bring it up. If it comes back up with a lower high, trade into 50% of this bullish candle right here, and then that's where the lower high is at 23.30. Then maybe they push it down, close it below there, flip your big green box red, and then you kind of come all the way back down. You've retraced the entire CPI candle. Okay, that might not happen. Maybe we're going opposite. Maybe it's going to just continue going bullish. So if we continue going bullish, we want to test this high of the day. Maybe if it can close above there, the high of the day turns into support, and maybe we're driving up to that yellow line. If it can, that's the first yellow line we got to test, and then maybe the next one. But maybe it comes up here again, pull back, and then we drive, and then it's got enough momentum to get up there. But let's take it level by level. Okay, so right now it's still bullish. I'm going to place a white line now at the 50% marker of this big bullish candle at 11 a.m. Open, close, half of it is roughly right around there, 23.31, 23.30. So I'm just putting a white line here, and that's to tell me in here that's hourly support. Now, if you want to find like an hourly fair value gap, you see from this previous low right here, 23.33, and down to 23.30. See, I'm not going to place all these boxes, but I just want to show you. You see how this body right here, this volume in here hasn't been tapped yet. So if you bring this across, I know it's a lot of green boxes, but if you get a pullback on the hourly, this has all been untapped area. So if it pulls back in here, maybe there's a lot of pending buy orders waiting still in the market that never got triggered. That pullback, it was coming down red. Maybe there was a lot of buy orders that were pending in there, but they want to get in at better pricing. The market didn't come down, so they could be still pending in the market, waiting. So the market might have to come back down, and maybe if they're pending in there, pick them up, and then it goes back up. Okay, but that's if you want to give yourself a zone. I placed the white line kind of right at 50% in there, but again, if you want to give yourself the zone, you can clearly see it. The bottom of that wick, the top of there, nothing has been triggered in there. Okay, but I don't want too many green boxes on my charts with you guys. Now it's kind of like a hammer candle coming back up. Let's see if it drives up there. 40 minutes to go on this hourly candle, lots of time. So it is bullish on the hourly. Can't deny that. It is getting a little bit overbought on the hourly. 5 minutes. Now you can see the 5 minutes, how we're kind of wedging right back up to where we had a double top at today's high. So you see it came up right there exactly at 9:10. We pulled back neckline, came back up at 9:25, then 9:30 Wall Street. There's the M pattern. Came up one time, back down, came up, two tops, big bearish candle, broke the low, came up and closed, and then they dropped it. Okay, so you got an M top right at the high of the day, and then there was the sell-off. You got a kind of double bottom created down in here at 50% of these big body green candles on the CPI. Then we continue to push up, and so we are in this little wedge formation here. It's still kind of, if you want to draw a trend line, if you need to draw trend lines, you can see it's still respecting the trend line, hasn't really broke. Maybe we got to see what will happen at the high of the day in this supply. Will they bring it down? Will these 5-minute candles start to close below here, and then maybe that might be the sell down. Okay, Remember, FOMC, it's hard to wait for a 5-minute candle to close because right away, as soon as 2 o'clock and then they release that number, you might see a huge red candle just drop. You might see a massive green candle just pump. You might not have time to react. So if you want to go down and trade the 1 minutes, you can and watch 1 minute candles close, but it's going to be highly volatile. Unless you maybe have a pending kind of sell in the market like this. Maybe if you kind of think with the numbers and the data and everything how it will affect gold. I don't know, like if you're looking for a sell and you put it pending in the market, then if it's a big red candle, you get triggered and then it drops. Yeah, you can bank a little bit on that, but you also got to know where to place your stop loss. They could come up, take out the high, take your stop loss out, then kind of drop it down there. That's but if you're, it depends if you put a sell stop in, a sell limit, things like that. So know your orders. If not, we'll wait candle by candle, see how everything is moving. Okay, but that's gold on the 5 minutes. I'm going to continue moving here, guys. We got a lot to do. 123. We might not even get a break. Okay, so that's gold. Just gonna. I'll share the gold chart with you guys in Zoom. And I'm going to move faster on NASDAQ and US 30. Okay, there is a link, TradingView link in the Zoom chat for you guys of gold. Okay, so we're going to leave gold to the left, right over here. Guys, do you guys just want 2 charts today and then I can make gold bigger? Do you guys want to pick one of these, US 30 or NASDAQ or S&P ES? Let's do that. Let's pick one of these, and then because we also have Bookmap, I don't want everything to get, what do you guys really want? Now, I don't care. I'm not being biased because I like US 30 or I don't care. What do you guys want? NASDAQ? NAS? Okay, let's do NASDAQ. And then, so it'll look a little bit cleaner, and then you guys... Okay, so I'll open up gold a little bit more. Hopefully does this look better for you guys? Okay. And if you guys want, I can switch to like NASDAQ in the book, or we just watch ES. ES will be kind of, it's the bigger player. It incorporates everything. So we can watch the bigger one, okay? Okay, so let's do NASDAQ now. Okay, how are we doing? Everyone following along? If you're in an active trade, please just manage it yourself, guys, just like you normally do. Okay, just got to go over top down. Gold, we just did gold, Nico. We just did a 1 hour analysis on gold, guys. Yeah, everybody, please, we got to pay attention together. We got to pay attention. You know, we can't get lost on FOMC. Okay, this is a very, very stressful time in the market, so you have to understand what's going on. You got to pay attention. Look at NASDAQ, okay? So, just some key critical levels real fast, okay? Not going to spend too much time. Here there was resistance on NASDAQ in the past, okay? So, the past dictates the future. There it was red. We come into here, we make it green. Stretch it into the future. Maybe NASDAQ at some point will come back and trade in this green box, and it might be a buying opportunity. And if you say you never did this, you might miss out on that buying opportunity. But we're nowhere near this green box, so we got to look at our next levels above us. Where's our next levels on the daily? Here was resistance when it came up. They pushed it back down. I can see this body closed above it. I can see right now it retested it and it's gone. Sometimes I don't even need to use boxes on my charts because you can just visually see where to place it, like right there, what I just explained. Here it was red, came in. Sorry, I didn't make it red because I'm trying to go a little faster here, but imagine this is red. It came in, back down, came in again in that red box, then they dropped it. Now we come back up green with that big liquidity grab down there, that stop hunt, and they closed it above the previous high. Then you should flip the box from red to green and then pulled back red, red, red right into the green box and started to continue to push. You had some consolidation, you had a bodies close above, and you also had a retest yesterday on Tuesday. It came red, 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 retested this area and started to break. And it hasn't stopped. So look at today's daily candles. These are like those 1 minute firecracker candles I tell you about, or any time frame, 5 minutes. Look at where the daily candle closed on NASDAQ yesterday. Okay, so how did it open? Red, 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 came in the green box, higher low, higher low, higher low. We're still above 50% of this big bullish bar on Wednesday, June the 5th. And we came right back up to where we opened and we took out the weekly high, last week's high, Friday. And it was very bullish yesterday. And we closed like 98% of the high. And so we have a small wick. We closed right near the high. Now, remember how I always tell you guys, in your playbook, you should assume how a candle will open, where it could go. You have to play these out, especially scalpers got to play these out quickly in their mind. If you're a daily trader, you have a long time to look at this. So this is the firecracker play where it opened red. Okay, how far down did it come? Did anyone place a yellow line at the previous day's 50%? Okay, I did. Did you? Hopefully you guys did. After a candle closes, you can visually see where half of it is. It's not rocket science here. So it came down. Are we still holding this level? Yes. It didn't even come down trade into there. It came down just a little bit and grabbed those right away. There was asking to trade. Like there was so much asking. There was so much demand due to Apple that the market didn't even need a pullback. It just wanted to go. And look, it just popped the wick and drive. This is price discovery. Remember what I said? Go up every 100 pips. Go to 19,200. Go to 19,300. Go to 19,400. Have your big box zone at 19,500. And what did I say? Guys, go back and rewind the calls. Did I not say go 25 points above 19,500 and 25 points below? Did I not tell you on the call to place a red box started at that nice psychological number, go up to 25 points, 19,525, and go down to 19,475. That would be your zone of liquidity. Make it a red box. What is our new all-time high and what did we get up to today? 19,525. You can see how these markets move, guys. I don't know. This is historic times where these are trading at all-time highs, but I kind of predicted that level by just knowing psychological numbers in the market. I don't care what security I'm trading. I don't care if it's an all-time high or what it's at. Markets are driven by numbers and psychological numbers. Will we continue driving? Quite possibly. What's the next level? Go again, 19,600. So this is where I draw a yellow line above at that psychological 100-point marker. If it goes more, maybe 19,700, 19,800, 19,900, 19, and then 20,000, then the same thing at 20,000. That's your big psychological number. Then when you get to 20,000, go 20,000, 25. Remember that quarter increase, quarter percent, quarter, 20. Wow, look at the big sell on ES right now, okay? So it's right into that supply. Go down to 19,975, and there's your next red box into the future. That could be a heavy liquidity. If you want to go your 100 pip lines up there, you definitely can. And if you're a scalper or whatever, like you don't have to have 100 pips, then you break them down into 25 increments. Go from 700, 725, 750, 775, 800. And see what happens at these levels, okay? it would be something special to see NASDAQ hit 20,000. That would be something special. I don't need to look at RSI. Okay, if I was to bring up RSI right now, what do you think it's going to tell me? Do you think it's going to tell me that we're overbought or oversold, or we're just consolidating on the daily? If I bring up my RSI, okay, it's showing me we're at 75. It's showing me we are overbought. 100%. Like, look at the candles, okay? We don't need RSI to tell us this, but Apple is in demand. If you're trying to short this, it might be the worst time. Maybe we got to wait for FOMC. Now they're shaking out the market a little bit. They're selling right now. Okay, maybe things are shaping up leading into 2 p.m. Maybe there could be some profit taking, some selling right now. But today's candle now. So let's continue. So you understand what I mean by that firecracker pop right there. Popped and it moved. Okay, so even if this was a 1 minute setup, that's a beautiful 1 minute scalp setup. So same thing. Candlesticks all have the same characteristics. A daily candle is no different than a 1 minute candle by characteristics wise, but just how long it's trading. Remember, this is 24 hours. So let's mark again. We opened our low wick. That's a purple line. That's our low of the day. Will we come back down here today? I have no idea. But if we do, I want to make sure I know it's 19,212. We came back up. I want to locate right now, open where the volume is. Where's half of today's belly of the volume? Right here. That's about half of it, 19,350, I would say. Make a yellow line there. If we do pull back red, maybe we stop around there, 50% of the volume, and maybe it catches a wick and goes back up, or there is buyers waiting in here. And then we drove all the way to our new all-time high up there, 19,525. Beautiful, nice psychological number. And then we got rejected a little bit, came down. So we're trading right now at 19,475 area, 480. What could happen? Yes, we could definitely continue to pump to the upside. We could retrace back down to 50%. It could come back down to where we opened. They could bring it all the way back down. Okay, but it's very bullish. Careful trying to short this thing. So the daily is very bullish. We're going to continue to move on the hourly now. Okay, so all of this consolidation, these are hourly candles, okay? And then we started to break out here Tuesday after hours, okay, 3 p.m. power hour. This is the Asian range consolidation, the futures market, and then it started to open up when, like, there's London 3 a.m., not much going on. Look at these little doji 6 a.m., 7 a.m., because the market was just waiting for the CPI data, and just big bullish candle. Did you locate half of this hourly candle? Like, half of it is right around there. If you did, you place a line there, then the pullback should be continuing to drive higher highs, higher lows. Now look at, we're getting this consolidation on the hourly. Look at these skinny candles, indecision, because the market is waiting for the funds rate and what Powell's speech is going to say. So do I need to look at the hourly RSI? Not really. Just when you see an explosion like this, look at the RSI. RSI is trading at 90, 87, 85. Like, it's crazy right now. So, but do we have like an hourly candle close below? Like, we need to see red volume close below structure, maybe come back up, retest this, then maybe they flush it. Let's just get some hourly levels. Okay, I like this. 50% of this candle at 9 a.m. Wall Street, open, close, half of it, and it lines up with the previous high at 8 a.m. news. So this to me is a good area to place a white line right there. Okay. Did you guys understand why I placed a white line there? This is a powerful candle. Wall Street, 9 a.m. Open, closing price, half of it roughly right in there, but I lined it up with that previous wick at 8 a.m. Okay, so if we pull back, if it comes down red, maybe close to this white line, 19,430, that might be where there's pending buyers waiting to buy it right back up and then test the all-time high, test the supply box. Who knows? Are they going to break a new high? Will it get rejected? And then will it come back down and then initiate the head and shoulder sell-off? I don't know, but I have to understand that this could be where pending buyers are waiting in there to buy the market on a discount, patiently waiting down there. If this can't hold, then it's got a high probability we're coming down to 19,400 on the dot, that psychological area where this hourly candle closed and the one on Wall Street opened. And if it can't hold there, high probability we're coming back down to this point of interest on the daily. And if I'm looking at this big body candle, where's 50% of that guy? Maybe what I'm going to do is I use that yellow line, the point of interest on the daily, and then drop it down a little bit into 50% there. I know it's a little high, like normally I should be a little lower, but I still want to respect that point of interest line and give it maybe a little bit of a zone, just to breathe in there if it comes in there. Okay, this might be also another area to maybe consider buying NASDAQ. Okay, so we are consolidating. We had very bullish move, 8 a.m. news, 9 a.m. Wall Street continued. Now we're consolidating. Now we got to watch for fake outs. If they're going to dump NASDAQ, maybe then we see an initial, there's liquidity up here, right? There's liquidity up here. Maybe they do take it up there. We see a bullish candle, then we see it get rejected, and then maybe we see it shoot down like this. And then we know they picked up the liquidity. Everything is overbought. They took out all the pending orders up there. Then it might be a good idea to look for a sell. That's on the hourly. But remember, we're going to go down to the 5 minutes. So these are 5-minute candles. Do we need to look at RSI on the 5s? Okay, they were extremely overbought during the news. We've came all the way, retraced all the way back down to, that 50%. RSI oscillates between 0 and 100. So this 50 zone, we're still just trading around here. The strength is neutral right now, right around here. The strength could come right back up and start driving back up there, or the strength could start to lose strength and starts to continue to push down here, and then it gets weaker, and then we might see some selling pressure. But right now in the 5 minutes, let's dissect these things. So you see the big 5-minute candle at 8:30, open close. We're kind of inside 50% of that. That was that pullback right there at 9:30. Came down red, and then spiked right out of there. It came back into 50% of the body, and then we drove, came back up. That's our high of the day. We made it around 10:30. There's kind of our supporting line over here. So just so we don't make any mistakes, see that consolidation right there? I'm trapping that, trapping all of this below me with a 5-minute green box. And then could be looking for sells below here to drop down. And then if you're measuring moves, guys, like I don't know, some of you guys might be scalping on 1 minute, 5 minutes, 3 minutes. Some of you guys are not scalping at all, but I scalp. So if I'm looking for a sell just to fill right down to that white line, that might be 25 pips. If it can't hold there, maybe we drive down to the next white line. It's 55 pips. Then right there, I can see those bodies right there and those wicks. So this is where I draw like a red line right around here. 75 pips, nice psychological number. If it drops right in there, that's where the support could be before it comes into the green box. So those are kind of like level by level I do. Seeing now we just pulled back into it. Right there, there's your red bubbles that sell right when we hit 130, new 30-minute candle in the market. See, I have these in 15-minute time slices. There's 115, 130. We'll see 2 o'clock coming up very soon. So we traded right back down. That was a big red candle. They took out the low, okay, but they couldn't break those 5-minute bodies right there. It is actually a higher low than here. So still, the depth of market is still holding, hasn't broken down. It came right back up, and now we're trading right back into 50% of that red bearish candle. So I'm gonna kind of do a 5-minute like this. My red line is, hopefully you can see that. See right here what I just did? See where it was resistance here, turn to support here, turn to support here. So it's still acting as resistance. So I'm gonna leave my chart how it is here. Do you guys want indicators like EMAs on the charts? Do you guys like those? 9 EMA. Okay, we're right at the 9 EMA, that green line. The 200 EMA is all the way here, right in our big green box. Okay, and then I'll give you guys this chart. Okay, guys. FOMC excitement. Guys, we're trading history. History. These are historic times in the markets. Exciting stuff. You got some good conversation pieces with the family on the weekends. Tell them, hey, do you guys know what NVIDIA is? Did you guys know that Apple AI, Apple Intelligence, were at all-time highs? Do you guys know what's going on with NASDAQ? Do you guys know what's going on with gold, oil, all of those things? Okay, in the Zoom chat, there is another TradingView link provided. So, nice little sell on gold coming down. Okay, so we're going to keep NASDAQ here. How does everything look? Okay, can you guys see Bookmap clearly? We were going to do 3 charts, but I think it's too busy to do 3. I kind of maybe want to keep it like this, so I opened up gold a little bit more for you guys, and then allows it to open up NASDAQ over here. I can do 3 charts, but it's going to get busy, I'm telling you guys, unless you guys are... I'll add some EMAs on gold. There's our 9 EMA, so we're below our 9 EMA, and our 200 is right below our green box. Yeah, maybe we'll do 3 on different sessions, but I believe it's going to be too much, too fast. Everything is going to be chaotic. Freestyle Friday, we're going to do something different in the markets Friday. I kind of want to do something different. It's more exciting for me too, from doing the same stuff. So guys, join us on Thursday and Friday. But Friday, what we're going to do is a Freestyle Friday session. I'm going to come on here and I am going to chart and look for trades with whatever you guys want. So I'm going to ask you guys in the Zoom and YouTube, you guys tell me if you guys want to look at, like, for example, USD JPY, something I don't really look at or talk about or analyze or trade or chart. It's going to be your day. I don't care what it is. Okay. And then we'll do like this. Quick top-down analysis. We'll watch it. If there's trades, we'll look to take trades. We'll talk about it. Maybe I'll think of something to talk about, whatever security we're talking about, and it's going to be your day. We're going to do. I want to try and do those on Fridays, where it's Freestyle Friday. You guys, we're surfing. You guys tell me whatever we want to look at, and I'll provide charts. We'll look at it. We'll talk about it as a group. We'll see. Maybe we'll look for a trade setup. Whatever. Okay, but we'll work as a team on Friday. Okay, so it's 1:45. Should we take a quick little 2-3 minute break? We have 15 minutes before the fireworks start. If you need to go to the bathroom or go for a smoke or go grab a drink or go grab some snacks, let's all do that. I'm just going to go to the I'll just go grab a drink really quickly and go to the washroom. I will be back in a few minutes. I'll leave the charts on like this so you guys can continue to watch what's going on. And then we'll talk. We'll come back, and in 10 minutes we'll talk about what do we think is going to happen with the markets. Remember, they're going to try a few fake outs. They're going to try some liquidity grabs. It might be just a big, massive red candle. It might be a big, massive green candle. Then we'll wait for it maybe to close unless you want to go in, but reduce your sizing so we can see what the range is. Maybe if it's a nice big body candle, we can locate exactly where is about 50% of it. Maybe if there is pullbacks to look to buy or sell, but maybe we don't look to trade until Powell comes to the podium. Who knows, guys? Sometimes FOMCs are fantastic. Sometimes they're choppy as hell. Sometimes they're chaotic. So, but there's gonna be a huge range. This is where they'll kind of flush out the market. So if you're trading with a tight stop loss and you don't nail it, you're probably going to get stopped out. So this is where we all have to kind of reduce our risk. Look at how you've been trading overall, your entire month. Are you up on the month? Are you up on the week? Are you up today? Do you want to risk everything you worked for today? You worked for last week, you worked for last month, maybe you worked for 6 months, maybe a year. Do you want to go and just risk it all right now? Probably not. So Like I had a few buys on NASDAQ earlier today. I'm up 1.9% on my account for the day. Normally I would be done trading. I would not even be looking at the charts right now. So I'm only risking not 0.9% on FOMC if I even look to take a trade or at 2:30 or in after hours. So if I get stopped out and I lose that 0.9%, I'm still happy that I achieved my 1% goal. And I'll still walk away with profit no matter what happens. Okay, I might not even take a trade. I might not even risk it. So maybe I'm going to end the day at 1.9%. I don't know, but that's how I operate, guys. I'm not looking to double up. I'm not at 1.9 and looking to double up to 3.8. We're not playing blackjack. We're not looking to double down. We're looking to trade properly with risk management. Get in, get your daily goal, and if you want to trade a little bit more, if you're above your daily goal, then learn how to allocate and play with your winnings a little bit. Okay, it's all about risk management, account management, and all of that. Okay, guys, bathroom time. Just a quick little break. Okay, and I'll be right back. Okay, as you guys should too. Just go for a quick little break and come back in a few minutes. Okay, guys, welcome. Everyone, take a quick little break. I got myself a little Gatorade. I need some fuel. We need some rocket fuel. Normally, I kind of zoom in on the charts. Like normally I go right in there, but I kind of don't want to lose the structure, so we can see if it does come up maybe for this high or the daily high. Normally I'm always zoomed in like right around here. I want to leave the overall bigger picture for everyone to see. Same with here on NASDAQ. So we know that that big body candle came all the way through there, consolidation 930. Took out the low, grabbed, but we'll see, guys. So right now they're bringing it right back up. Gold, these are not correlated or anything like that, so don't think if gold moves this way, NASDAQ has to move that way. Just focus on the security you're trading, okay? So if you're trading on NASDAQ, you focus on NASDAQ. Don't worry about what gold's doing. If you're trading gold, you worry about what gold's doing. Don't worry about NASDAQ. If you're looking to flip-flop both of them, that's different. But just visually look at what you are looking for. Franco, you feel bad for Ms. Jones. We left her behind. I know, but she'll be there. She'll be there tomorrow. She'll be there. She's not going anywhere. Okay. So let's just get everyone's quick thoughts. Gold. What do we think for gold? Do we think bullish to take out the daily high, 23.41, or do we think bearish, we're going to trade down into this green box down in here? What do you guys think? Bullish, Barney? So you think we're going to retest the high of the day up here, 23.42? Yeah. Jaco, welcome all the way from Hungary. Welcome. I visited Budapest years ago. Beautiful, beautiful city. Short and Nicholas. Okay, guys. Gold bearish, everything bullish. yeah. Everything bullish. Well, let's see. We'll see. Okay, bullish. So most of you guys are bullish bias on gold. So maybe they're pulling it back a little bit, and then we're gonna get that news. Okay, so let's just play it out. A decrease in the interest rates, is that again good or bad for the US dollar? A decrease. So if they go 0.25% decrease, and it's 5.25. Is it bad for the US dollar? Not meaning bad like it's gonna get like you're grounding, but maybe it might see some selling pressure. So yeah, probably some selling pressure. So then maybe you guys that are saying bullish on gold, absolutely. Maybe then we're gonna come back to the daily high and we'll see if we can take it out. Okay. But what happens if there's no rate change? What happens if we get no rate change? They keep it at 5.5. How will that affect gold? Would you guys think still will be bullish, or do you guys think some selling pressure on gold if there's no change in the rates? If they keep it at 5.5 and there's no change, still bullish, yeah, then maybe we may continue going with the overall momentum. So we have this big bullish move. Pullback is double bottomed here, higher lows. We came back up, couldn't take out the high, the daily high, but small retracement, and maybe continue to go up bullish as it's already trading. So and I have it. Do you want it on ES, on S&P, on Bookmap, or do you want me to go to NASDAQ? It's completely up to you guys. ES, S&P gives us a broad overview of everything, so kind of incorporate, like it's if you're looking at US 30, if you're looking at S&P, if you're looking at NASDAQ, maybe it gives us the whole broad overview. But if we want to get specifically and just look at NQ, NASDAQ, we can do that as well, okay? So I'll show you real quick NQ here. Okay, so we can see NQ how it's trading. 115, 130, 145. Here's 2 p.m. You can see this vertical dotted line. We're getting close. We're about 3 minutes away. So do you guys want me to leave it on NQ, or did you guys like ES? Okay, so they had the big push down right here, right before 130. Okay, so some buyers got trapped up there. I can see them right there, 130, kind of right up there. They bought, and then they pushed it down. Okay, the sellers were looking down there, but then the buyers asked to trade back up. So we're kind of retracing right back up to that 50% level right in here. Okay, NQ is good. Okay, so if you guys want NQ, we're all on NQ. But also let's see what's going on in here. Okay, so we've got 2 minutes. Good luck to everyone. Please trade with proper risk management. I'm not a financial advisor. I'm just Uncle Ronnie here, breaking down the news with you, breaking down. If I take some trades, it's on me. It's my own risk management. Don't trade blindly, guys. Make sure you understand what you're doing. Mental errors right now. Go into your trading station, wherever you trade. Make sure you have the right security. Make sure you have the right lot size you're using so you don't make a mental mistake. Make sure you hit the right security. Just right now, think how to avoid all these mental mistakes that traders normally make. Don't screw up. Remember that spreads are going to be crazy. Spreads are going to be very out of whack. There's going to be a big range. So know that as well. Maybe you're going to have to wait a little bit for markets to settle down. I don't know. If you're using a market execution, if you're using pending orders in here, you should know how to use these. Like, you should not be learning what a market order is or what a pending order is or how to use a buy stop during FOMC. This is all something you should be learning before these events, okay? So if you are very basic and you're a beginner, don't be fooling around here. Make sure you know what you're doing, okay? Because this is where a lot of traders do a lot of damage to their account when they don't need to, okay? So, and if you don't know what a pip is, or then don't be trading, okay? Until you learn what a pip is, or just some basic terminology. Don't feel like you got to hit and buy the buy or sell button. Okay, so trade smart, guys. Here we go. 20 seconds to go. There's probably going to be a move like right before. Look for maybe liquidity grabs and things like that. Maybe we're going to play out the full 5-minute candle to close. If anyone can give me just the number of the interest rate when it does come out. So remember, 5.5. Okay, here we go. The drop, okay, NASDAQ. See, look at how late it is on TradingView. Okay, that's why Bookmap can give you a little bit of a clue. Is it liquidity? Liquidity. See, okay, the wick came down right down to our white line, that hourly support. That's where those hourly buyers were pending in the market. That's how we analyze this. Are they going to continue to ask? Is that going to be a big liquidity grab and then break out and take out the highs? Same with gold. We came down into the green box right at that yellow point of interest, 23.25. It's volatile. Okay, is it going to flip? Like, maybe avoid this if you or if you're trading it. Is it still holding? Is the pressure still holding on sellers? Maybe it's too early to determine it. Look at, okay, so we got a big wick now. Did they come down, take out all the pending orders down there? And is NASDAQ going to flip and continue to go? Do we have any numbers? No change, 5.5. Thank you, Shaquille. I appreciate you. Thank you, extra me. Okay, so no change. Now, are they just going to take out pending orders? Are they just grabbing liquidity, and our market's going to continue to trade in the direction that they were going? Okay, let's see. So we got no change, and then now we got to listen at 2:30 why there's no change. What is Powell? How is he going to justify this? How's there no change? Why no change? Is it going to say maybe a change coming in July, but we're just playing out the markets to see what's going on with CPI, PPI, inflation is getting better, and this and all that? How is it going to dance around it? But right now, let's continue watching. Okay, so is anybody like, I'm not in a trade, and I'm not anxious to take a trade. I'm just still observing what's going on in the market. This is the first 2 minutes. Okay, let's let the candle play out. Let's allow our boxes to play out. Let's see what's going on. Okay, look at this candle might flip back green. Look at it. It's flipping. It turned. See that? It came up, created a new high. Now it's a pin bar with 2 minutes to go. Okay, so are they going to come now and take out the highs? That's another thing. So we know it's confirmed that NASDAQ took out the lows right at our hourly white support line, came back up now. Are they going to take out the high liquidity? Are they going to sweep the high up here? They haven't done it yet. They tried. They came up right up there. Then it came back down. Now we're coming right back up with more bids. We might just close with volume right back in our kind of consolidation box. So then, but let's see if they take out the highs now. Will it close above here? Will we come back down and pick up a higher low wick? Then we're breaking out for a new all-time high. Look at the range of the candle. Okay, so far on NASDAQ, this range of the candle. So you know, like that's a 80 pip range candle, 80. So if you're on the wrong end, and you're trading with a 10, 20, 30 pip stop loss, this is 80 pips. Now we're coming back down red. Okay, so the buyers never took out the highs. It's still a lower high. They're pushing it right back down. Buyers are bringing it right back up. This is the indecision. Every time it comes down, buyers are buying it up. When it goes up, sellers are selling it down. Do we have an actual direction of where it's going? Not yet. Well, let's wait and see maybe where it closes. Gold is an ignited red bar that came right down into our green box, coming back up. Where will it close? Will it close below the hourly white line? Will we close near that daily yellow line? Will it come back up? Our negative cumulative volume delta is negative 800 on NASDAQ. Okay, so maybe that might play out. Bookmap is going crazy. Yeah, sometimes you don't get good read on Bookmap when there's this extreme volatility, but it is leading indicator. So if you follow kind of Bookmap, did you see how it dropped and then how lagging TradingView was? So you can kind of get a little leading. This is live futures depth of market. Matt, you had a good day today. Okay, don't go do anything silly. Don't blow anything. Control, discipline. Think of a beer that you're gonna have after this call. Think about that. Don't ruin anything. If you guys have had good days today, don't go blowing anything. Don't be silly. Those days are over of silly trading are over. And now you trade more like a professional. Oh, did you see that? Okay, so you see how they just kind of broke the low there, and then right away, did you see that red heat that came in? Okay, now we're getting right now the close of a candle. So now it's going to start to get the volatility still. So now we close right there, open green. It came up, they flushed it back down. We have a long wick, but with this type of news and this type of volume, it could fill that wick. It's not like it on a normal day. Okay, now we have extreme volatility, but we're still kind of in this green box. Remember how I extended it in this consolidated bodies right over here? So we're still kind of above it. We haven't closed red below the green box yet. What does the red heat mean, Barney? Liquidity. I don't know whether it's pending buy orders, pending sell orders. It's liquidity. It's a lot of pending orders in the market, a lot of it. But hopefully the cumulative volume delta can help determine what it is. So far we're still got net negative delta, so it's a lot of sell side liquidity. Okay, and then gold, you see how now gold is now retesting that hourly white line. So you kind of have it trapped in between the hourly and the top of the green box right here. That's where the volume is kind of trapped in here. Will it break out of here? We got a bullish candle coming right back up on NASDAQ. 50% of it is right there. We're right at that 90 EMA. They're rejecting it back down. Will the sellers absorb these buyers and then continue to break it down? But right now it's still a lot of good buying pressure on NASDAQ, still in this green box. Now they're exhausting those buyers, And probably gonna come down and test the low of the candle and could further push down. But it could pick up some more buyers and come right back and trade in the green box. So maybe I'm gonna watch and see if this candle can possibly close red below here. But again, it's gonna take 2 minutes and 45 seconds to wait. So do I want to take like an impulse trade on this shooting star candle? Some traders do that. Maybe in this situation, I'm gonna kind of hold off. Because it's too extreme right now. Maybe I'll wait for this candle to close. Okay, so gold is still bearish currently. It tried to come up to that hourly resistance. They rejected it. Now it's coming back down, trading down to that key critical point of interest. Okay, we got that nice shooting star candle, which retested 50% of that red volume. It came back down right there, came back up. Where will it close? Will it close as a higher low? Will it close above this white line? Will it close below there? Will it close below our green box? Will it trade right back in the green box? Will the next candle open green and come back up? There's so much that could happen in the next minute 45. That's why I kind of don't want to trade impulse candles right now. I want to wait for bodies to close. And do I feel bad that I never took that, the woulda, shoulda, couldas? No, because I determined that I'm not going to take it no matter what happens until the body closes to give me more confirmation. 60 seconds to go. So gold is trying for that daily point of interest down here at that 23.26. So buyers of NASDAQ are continuing to ask up here. So the market is maybe just taking in that 5.5 no change. We're going to get maybe a next move coming up at 2:30 with Powell. But remember, we have a new 15-minute candle in the next 5 minutes and 20 seconds. So maybe if you look at your 15-minute candle, maybe we'll give you a better, clear picture of how things are moving. As soon as this candle closes, we'll take a look at the 15 as well. Are we closing with a bullish spin top inside this green box? Looks like it, unless they do something crazy right at the close. Okay, so we broke down, no red volume close below there. It's a bullish spin top. They just open it up green right away. Let's see the pullback. It's pretty ignited. So maybe this is going to be a buy opportunity to continue to drive back up here. But this now created the first bottom of structure. Okay, when I'm looking at things now, I see maybe one bottom now. Maybe it's got to come up and figure out where the neckline is. If we pull back, we might be still pulling back in a green box or a physical double bottom, and then maybe it will continue to drive and test the high when we opened FOMC, and maybe test today's daily high and break out of here. Okay, so when I'm just looking at structure, remember we're going into 2:30. Let's see that the legs that they're developing. If you feel comfortable taking a buy up here, maybe then you got to locate where you're placing your stop loss. But you're buying then the top of the second leg where maybe we're trying to figure out where the neckline is. So this is also a critical area here too. So you might have to hold off unless you believe that it's going to continue to push through here. Gold is doing very similar thing. First leg that came down, got a couple bounces off that daily point of interest, came back up, but now they're pushing it right back down. So you got to be careful. And then look at the 15. If these fives are not telling you anything, look at the 15. Like, what do you see on the 15? It opened bullish. Remember, it came all the way down, and now it's coming right back up. Still above that green box. It's going to close in 3 minutes and 30 seconds. The 15-minute candle of gold was a bearish ignited bar that opened, came all the way down, and caught a little bit of wick. This 15-minute candle might come down more bearish on gold, and gold might continue to sell down. But kind of little mixed here on NASDAQ. Again, it came up, it did create a higher high, but but then pushing right back down into the green box again. See, like Bookmap, how it's all consolidated in here. It's a really, really difficult area to see what's going on in here. Okay, so that rate cut, or sorry, the rate pause, 5.5, was seen bullish on the US dollar. That's why there was that initial drop on gold, a little initial drop on NASDAQ, but still building in here. Is everyone still okay? Like, I haven't taken a trade, but do you guys understand why I haven't really taken a trade yet? It's not the greatest FOMC, to tell you the truth. Maybe we've got to wait for Mr. Powell. I'm looking at my spreads too. So I'm looking at NASDAQ. NASDAQ, I have 0.8 spread. If I take gold, I'm 1.2 pips right now if I'm looking to trade either one. Have your spreads calmed down a little bit? Yeah, maybe markets are waiting for Powell. Yep. But gold now came back up green, shooting star candle, push down. If they take out that low, there's that 200 EMA in the bottom of the box. So we had a lot of buying on gold when it broke down there at 10 o'clock. We had a lot of buying when it came down there at 10:30, but now it's coming all the way down. If we lose this support on gold, that's where it could flush down. Also, NASDAQ is trying again to come back down here, maybe close below this green box. A minute and 18 seconds, then we have that 15-minute bar closing and a new 15. Okay, so gold is pushing down. And just these like NASDAQ candles alone, like if you just look at the range of these, like when you're now thinking about if you're going to take a trade, like just these two bars that are consolidating, they're about 30 pips, 35 pips. So you got to know like how to, what stop loss to use or how much pips to risk on a trade. If you're risking 30, 40, 50, 60 pips, then you got to automatically assume what lot size you're using and decrease your lot size to make up. Maybe some of you trade the markets tighter than that, but now you got to kind of open up with the volume a little bit. So if you're opening up your stop loss to breathe, lower your lot size a little bit. Okay, so here we go. 10 seconds into the close and a new 15-minute bar. Okay, so NASDAQ is trying to come back up, still consolidating in here. Gold is obviously breaking down. Someone is at my doorbell right now. Awful time right now. So I think it's an Amazon delivery for my daughter. I'm not going getting that door. Not right now. Okay, so gold closed below the yellow daily point of interest, retested it, could start to push down. NASDAQ now, okay, so we got our leg coming down now. If we got a higher low, this might be a potential opportunity up here. Let me just kind of make this a little bit bigger. Okay, so it came up again, they rejected it back down, came up, back up again. These are all the resistance, previous resistance right here. Can we break above this? Okay, it is. Okay, good push on NASDAQ. So no red volume closed below there. They held it. It's coming right back up. Okay, let's see. Let's also follow the structure that's being built before Powell comes to the podium as well. Okay, so if this is a big green bullish candle, is it have enough to take out that previous high? Will we judge where's about 50% of this volume? Is it just going to be another lower high and then they push it right back down? So these are things like we gotta pay attention to. Just because I'm not in a trade doesn't mean I'm not paying attention to what's going on. I know in the next 15 minutes Powell is coming. Maybe they're creating a little bit of structure, but this is not the greatest FOMC. It's all because they kept the rates the same. Maybe want to hear Powell's voice. Why? Why is he not decreasing the rates? What is the justification? See, that's why you don't got to go crazy with FOMC. Like, I know it's overplayed, big event, this and that, but like I was trading earlier this morning and it was fantastic volume. This is just because it's FOMC doesn't mean we got to go. We got to trade completely different. Forget about our risk management and just have fun with this. Because don't worry, maybe the markets will trade so clean tomorrow that you're gonna understand why trading this wasn't the best. But whatever, everyone, you guys are all different. Some of you guys are selling, some of you guys are buying, some of you guys are buying, some selling. It's all good. I'm just waiting again to see what's developing until we get Powell. So I'm looking for fair value gaps. I'm looking what's holding, where's structure in the market. So now, just putting the piece of the puzzle together, they broke it down to that hourly support. They cleared the pending orders down there. They came back up. Now it's coming back up. But can the buyers break it kind of above this resistance? Can they close it above here? Are we going to tap into the all-time high before Powell comes to the podium? Are we going to break all-time high when Powell comes? Will this happen now with Powell? Will Powell be the one that brings it right back down? Nor you think Powell will pump to the new all-time high? Yeah, possibility. And then gold is kind of trading right back in that, again, that consolidation, the neckline. So it's one leg that came down. So now it's coming right back up. Will we come back down into 50% there, pick up a wick, then start to break out of here? Will this candle come back and close above that hourly white line, above the 9 EMA? Okay, and you see now the cumulative volume delta is all balanced out. So that initial drop, where it dropped right there, where it came down all the way down to minus 6, 700, 800, and then it retraced all the way right back up to where now the cumulative volume delta is balanced. So it's kind of like right where we initially opened at 2 p.m. Okay, so the market came down. It came right back up. Again, we're right where we opened. Might trade around here for a little bit until Powell comes. Now, again, this is the question. Will Powell take it to new all-time highs up here? So the market is now consolidating near the highs in case that happens. Will Powell, say something and then the market comes right back down, trading into this green box? Now, like even in FOMC, I still do the same thing. That green candle, open, close, I look at where's half of it. Okay, just because it's FOMC and it's really volatile right now, maybe it will retrace right back down, right into there. So I'm assuming 50% is right there, half the candle, right at that 90 MA. If it comes back down, will it catch a wick and hold majority of that bullish volume below? Like it's coming down red now. Will it trade right into 50% right there and catch a wick, right where my cursor is? So it caught a wick. Will it flip back up or is it going to come right back down? So you see where the resistance is now, right up here. Okay, so we caught our wick at 50% so far, but there's still 3 minutes and 45 seconds to go. So then higher time frame is bringing it right back down. We're trying again, another test at that 50%. Will it hold again? Will the buyers ask to trade back up here? Okay, so we just held a second time. There's a wick, another, so it's kind of a double bottom within the same candle. Okay, think about it like that. It's a double bottom within the same candle. Now will it flip and turn into a bullish pin bar, getting ready to break out to the upside? So the sellers came down there. They came down there. They were looking for someone to transact with, and the buyers said 2 times we're asking to trade up here. Now for the 3rd time, the sellers are bringing it right back down again. Did they have more offers in the market to bring it down? Now think about it, it's as a triple bottom within one candle. 3 times now they came to try and attempt to break 50% of that volume. And the buyers are saying we're asking to trade back up here. And then you see how it just kind of consolidates in here. If I was to trap this zone, I know it's real tight and this is FOMC, but if this was any other day, I would kind of trap this volume in here. See, 4 times now we came down. Quadruple bottom within a candle. Okay, 4 times the buyers held this position. But it's not really, they haven't flipped the volume yet. This candle has not flipped into a bullish pin bar. Do you guys understand, like price action? I tell you, candlesticks have the same characteristics. Just because it's FOMC, and you see how it's still respecting 5 times that 50% level? So this, now they flipped it green, bullish pin bar. Will it have now enough sustained volume to break out of here? Now it turned into a hammer candle. So now it's a hammer because we're trading at the high. Okay, so you see 5 times sellers tried to break it down there, and it held 5 straight times. Will the buyers now close it above here? Every time we attempted to get out of here, it was an impulse. We came up there, lower high. We came up again, lower high. Now they're trying again. It might finish as a spin top candle with indecision. Same with gold over here. It's still consolidating right in this box. This is this is price action. I'm used to this. I don't know if some of you guys are used to this. You guys are probably saying, why hasn't this guy taken a trade yet? What is this guy doing? But you got to wait for that nice setup. This is not a nice setup. I could have taken 5 trades by now, but they're not like high quality trades. They would have just been quick in and outs, quick in and outs. Okay, and now you see, now they're bringing it right back down a 6th time. Now it didn't create that new high, so now the sellers are pushing it right back down, and we're testing this area again. So like when there's lack of strength on the buyers, they couldn't really even take out that little wick there by a couple pips. Then the sellers see weakness, and then maybe a new seller will come in and add more contracts on offer, and then see that they're weak. They can't take out the high. Then maybe they'll break this low, and the sellers can drop it down a little bit more. 15 seconds to go into the close. Still, it's like all we had was just the initial push down and then retrace right back up. But we're kind of trading as if FOMC didn't even happen. You know, they didn't change the rates, so all I see is maybe a sweep to the low and come right back up. I see gold swept the low, coming right back up, consolidating in here. We're 225. This is the last 5-minute candle before Powell comes to the podium. And we have a new 30-minute candle opening the market. So look see how this candle opened ignited green right at our critical area here, where the buyers held it there like 6 times. Now the next candle opens green ignited. Does this have enough momentum to take out this wick? Or is it going to be another lower high, and then they're going to take out these initial excited buyers and then start to drop it back down in here? And then Powell is going to cause the market to do this. It might break out to new all-time high, like take out these highs, and then maybe come back down, or close here and then drives. Or when Powell comes, the market is going to sell back down into the green box. It's going to come back down into here. And then will the market pick it up and then take it back up? Okay, so understand how markets operate. Look at how we came right back to consolidate where we opened at 2 o'clock, and now we have Powell coming in the market. Will he think of it like a market maker? All of the pending orders up here. Will the market come up with Powell to take out those? But will it be a strong and an actual nice bullish move, or is it just going to be a liquidity grab, fake out, take out the highs, and then they dump the market? Same thing to the downside. Is it going to come down here and then trigger all these bids and then go back up, or is it actually going to be a sell move where it comes back down there, maybe closes below, and then they just start dropping the market. The market starts selling off. Okay. When I say the market, I mean NASDAQ in this situation. Gold is still just consolidating right in here. Okay, so we got a nice big still bullish candle, maybe a 3-bar play. Green still respecting 50%. We got a nice strong bullish candle developing. This should have a probability to start to break out and maybe test that previous FOMC high. It was right there, you know, right there. There's 2 p.m. right where it kind of opened right there. Those buyers got trapped up there, and then the market came down. And all we had was this inside consolidation. Cumulative volume delta again is just right at 0. It's balanced. Oh man, like it's balanced perfectly, waiting for Powell. Like it's unbelievable how these markets operate. Okay, now, quick question. We got 2 more minutes to go. Gold. Are we bullish on gold to come back and break this hourly resistance, 23.32, and start to trade maybe at this yellow line or higher? Or are we bearish on gold, going to continue to sell below 23.25 down into here? Gold, bullish or bearish? What leg do you think we're going to get with Powell? Another bullish leg? Okay, possibly, yeah. Bullish for XAU. Okay, bullish, guys. Okay, so, but in order, let's see if this candle can close above that white hourly resistance. And with Powell too, the market could just jump. It could have like a knee-jerk reaction and just move, be volatile again. Okay, NASDAQ is trying to get out of that. That's the FOMC high when we opened up right there where my cursor is, 19,512. We just tapped into it, okay? Do they have enough to take out? Are they going to take out today's daily high now? Will it close above here too? Let's look for the physical close. I can already see where I would place a red box right here, right here, right here, right here. This might represent 50% of this green candle right there. No, they're bringing it right back down. Where will it close? We got 45 seconds to go. And I urge you guys after the call or later this evening to listen to the conference with Powell. It's about 30, 40, 45 minutes. Listen to it from start to finish. On YouTube, they have like the clipped out versions that you can listen to. You don't have to spend your entire night on it, but just listen then. And then listen to what he's saying about everything. And more importantly, the future guidance. Okay, so here we go. 2:30, 3 seconds to go. We broke that high. Come down. Where is it going to close? Watch clearly. Okay, closed above. Ignited bullish candle. Does it have enough momentum right away to take out that previous high? No, it's a lower high. Still ignited. Still a lower high. Still ignited. It should be able to take out this high. No, not yet. Okay, now they flipped those buyers down red. Now, where's 50% of that green candle? Right where my cursor is right now. Will it hold there? Will it hold the actual retest area? And this is where we could potentially look to buy with Powell, but still kind of inside here. Hasn't taken out that high yet. Still an inside bar. Is it still going to hold? Yes, they're asking to trade up here. Okay. Pull back. Tweezer top highs. Gold looks like it wants to punch out of there. NASDAQ 2. Okay, look at Bookmap. Tweezer top highs. They're pulling it down. Is the asking going up? Powell probably hasn't even came to the podium. I don't even know. I'm just following the price action right now. Purple tie. Okay, we got purple tie correct. Okay, I'm going to buy because you said purple tie. I'm going to go in and buy. I'm going to place my stop. I'm going to trade a little tighter today, just right below that green candle. So I'm playing the high of the day break up here. I'm going to try. I don't know if you guys can see my stop loss, but it's below this big bullish candle. I might get stopped out. I'm going to see if it will pick up. I got to use these red lines in this red box right here. Let me get rid of this red box if I can. Okay, that's it. Stopped out of there. Okay. I can get back in, but I got stopped out. I don't want to play now. Now Powell is there. Now he's talking. He's opened his mouth. I tried for a little quick scalp, didn't get it. I got stopped out. Now let's really pay attention to the markets here. I wish I had like to listen to what Powell's saying. Okay, so that was my stop. I told you it was a really, really tight stop, but still disciplined. I don't want this thing to come down red. Okay. Okay, so gold broke out, coming back down. Get ready. Maybe possibly he's now talking, who knows? Could be saying something bearish about the markets. I don't know. But he's going to talk about why the 5.5 real quickly. Here's the volatility. The volatility is here again. So I'm watching this. Yes, I did get stopped out, but I'm still watching it. Got a wick coming right back up. Still trading in here. Let me get rid of this. I want to kind of clean this up. Okay, this is a little bit more clear. Okay, coming right back up. Yeah, my stop was too tight down there. Should have maybe placed it a little lower, but it is what it is. Whatever. Let's see here. Holy, this is a horrible FOMC. Like it's sideways. It's sideways here. So I'm gonna wait for bodies to close now. Will the green come back up, close above here? Will it close red down here? Okay, so liquidity grab down here. Still higher low, coming right back up. But now the volume is just trading where the green bar was, red bar. Maybe next candle will be a green bar coming back up. 55 seconds to go. Gold is going to try. Again, that hourly white resistance line. Can it close above there? Can we get a push on gold? NASDAQ is just all over the place. The index is garbage right now. Maybe we should have traded the Tokyo session instead of FOMC. Like you see, sometimes these FOMC sessions are just hype. They're played out, and they're horrible volume. Like I still don't have no direction on where this market could go. So that's why don't over leverage when it's like this. I went in with a very small size and had the discipline to just step out. Okay, now the market is pushing down, back down into green box. If you're selling, yes, it could sell, but then catch a wick and come right back up and go back into this consolidated area. So I'm just on the sidelines now. What we can see on gold is they did take out that hourly resistance up there, push down. Now gold could trade back down into here. I don't like the way how it's trading right now. This is where I'm going to stay on the sidelines until more volume maybe can close here or close below here. Too volatile now. Now I know Powell's opening his mouth. Okay, now it might look to possibly, if they take out the low, we'll see where this closes, pull back, then maybe we sell the pullback. I don't know, but we'll wait for this body to tell us where it could possibly close. Yeah, they're dumping it. They're trying to push it down, but they're pushing it down into support. Yeah, US dollar looks strong. Looks like it's going to break out. 104.60 right now for the US dollar. So if gold starts to break, push, or not gold, I'm sorry, US dollar. US dollar is at 104.60. And it's breaking through resistance. So then we might see continued pressure to sell gold to the downside. Okay, so in my opinion, I think now it's time maybe for NASDAQ to start to cool off. With that move, it didn't take out the daily high. Wow, okay. Maybe Ron is completely wrong, but that's why. Wait for the candles, this one to close. I'm waiting for this to close. Powell said through inflation, though inflation has eased substantially, it is still too high. Yes. Wow, okay. Big green body, too much volatility, guys. Will it close above here? Will we get that bias of that bullish move? Man. Yeah, sometimes the big move may come in power hour. Yeah, that's why. Barney, I'm just taking a small size until kind of get maybe more of a direction. If now it's coming right back up bullish, will we close? We need volume closing above here. Okay, so see the big push, then they push it back down. Big push going up, push it back down. 1 minute 55 to go. Again, if I like, for example, if I go look for a buy, then I might be buying and then they bring it down on me. So now I'm waiting for the full body to close no matter what. I kind of speculated with that first candle, but now I'm waiting for body to close. Holy, this is horrible. Like, if this wasn't FOMC, I wouldn't even be looking at this volume to trade. This is like absolutely the worst volume, like the worst candles, the worst price action. It just FOMC gets this huge hype. That's why I tell you guys, do not risk your weekly profits or your daily profits on unnecessary event like this. Watch what happens if you do take a trade. Just go a manageable size like me. I went a manageable size. I got stopped out. It's still all good. It's nothing. 0.1. But if I see a volume close and a nice setup that I like, then I'll go a little bit larger sizing. But right now, I don't want to play with this. Yeah, Craig, you're calling it a day? Yeah, if you're up, call it a day, guys. Now it's question part. He answered talking. Yeah, so now it's the Q&A period. Okay, here's the close now. Let's pay attention to the close. It's coming back up green. Will it close above? Okay, we got maybe a strong close near the high. Yeah, okay, nice, strong. Did it take out any highs yet? Not really. Okay, now it did. Here's the close. Get ready for maybe a potential. There's the ignited red candle. So get ready for a quick wick. And we're right at the high of the day. Quick wick. No, it's red ignited, red, red, red. Where's 50% of it? 50% will be the exact retest of this white consolidation box. Right there. Is there a wick there? No, not yet. Okay, so it's a big red, heavy red candle coming down. It was ignited right, like this is how the market operates. Okay, we close 99.9% of the high. How did this not open up green just to take out the daily high? They opened it red ignited, brought it red, 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 red all the way down. Look at there. Now it's coming back up. Holy still. This is crazy. Gold, same shit. Same in that range. Now they're bringing it right back down. So, FOMC, like nothing great. But what can we see if we just look back? Okay, so remember FOMC was that big red candle, got respected at that hourly support line. We came back up, then they brought it right back down again, right in the green box, higher low wick. Okay, that should have been green and broke right there, but the market has other intentions, so they needed maybe to bring it back down, maybe to gather more bids. Is it going to come back up? Then that's enough for them to break out the daily high and the new all-time high. Okay, let's pay attention to that. Because remember, this is price discovery up here. The market has never traded at 19,525. Only time it hit up there was this morning at 10:30. This is all-time high territory. You might need extended and more volume to break all-time highs and continue driving, but no structure has really broke bearish. I don't see any red candles closing below here. I don't see any red candles closing below here. We might not even see a red candle close inside this consolidation box. So all I see is higher low, higher low, higher low wicks. Maybe this might flip and then get that big breakout to the upside. Gold too, it's right in that consolidated area, just trading sideways. Careful, careful. Body bag, you're grinding all day picking up the crumbs? Yeah, that's kind of how I trade, how I scalp the markets. A couple crumbs here, a couple crumbs there, and by the end of the day you got a full cookie. And you got, or a pancake, whatever you guys are eating. I'm normally eating pancakes, but if you guys eat cookies, just need a couple crumbs to survive. We don't got to go for the whole thing. Just eat a little bit, chip away. Okay, this is, to me, NASDAQ is horrible right now. Like if you look to take a sell, you're selling into demand liquidity. If you look to take a buy, you're looking to buy an all-time high. So it's just, if I was not on the call with you guys, I would walk away from these markets, and I would come back tomorrow. I would watch and listen, maybe watch Power Hour close, listen to Powell's speech, and tomorrow might be much better volume to trade. Again, do top down on the daily where it closes, hourly candles, get ready for London and New York. But if you still want to stick with this, which I'm still sticking with this. I'm not throwing in the towel, but it just, look at where we're trading. We're right back in this same zone. Like, yeah, I know it's hard, but you have to be very patient. You got to be very patient. If you're taking any trades, go small, go little feeler trades until something. Maybe gold is going to start to break down now. Okay, maybe gold could potentially start to break down, but your 200 EMA is right here. So this is where you got to be careful. They might break it and then come right back up. And we have another critical time in the market. It's 2:45. 15 seconds. Look at it. Did they sweep the... Oh, man. NASDAQ is reckless. Okay, they came back down into the green box, come back up. Here's the close in 1 second. There's the close. Close red. Below here. Okay, opened. Came down. Green came back up. Oh, man. But we're out of that consolidated area. So this is where... technically, markets may look to push to the downside, but we got these wicks again right inside the green box. Okay, I'm just going to clean up this chart. Okay, and if it starts to break down here, this might be a potential selling opportunity if it keeps going. Lower high, pushing it down, got that lower low, but still holding green up here. Gold tapping into that 200 EMA. Be careful right there. A lot of things can happen at that 200 EMA. And then 50% of that big red candle that came down, that ignited red bar that opened, came, closed down. 50% is kind of at that red line, that 19,500, that psychological area. So if we're coming up green now, okay, we're coming up, it is green, but remember, we're following a big red bearish candle. So this might be like a pullback and then they drop it right back down. Depending on how high this thing can go and where it can close, still we haven't broke any real structure below here. We're still holding above the green box. Don't have any red candles closing in there yet. We've got a lot of now green cumulative volume delta over here. So there is a lot of interest in the buyers. But we're in this tough range. I wish it was much better than this, but you know, there's nothing we can do. Powell said everything but answered the question. Yeah, that's normal. We expect that. They always dance around the real question. He's like a he's a politician. They know what they're doing. They'll avoid the question at all costs and just dance. Market is very uncertain right now, Sherry. Yes, very uncertain market right now. Except for gold. Gold looks like it's breaking down. But don't worry, let's stay with NASDAQ. Let's not all give up right now. We're still on this call for another 15 minutes together. So we're going to go into 3 o'clock. Samuel, you're watching this on the 30-minute? Yeah, it's probably crazy on the 30-minute. Look how crazy the fives are. Gold looks like something could be developing. If we get a closure below here, flip this green box to red. This consolidated zone, we moved away from here, so kind of I just tidy up the chart. Maybe I get rid of this box now. If it closes below here, remember that low. Let's see if it will take out that low, 23.20. Just have a little marker line right at that little red wick right there. We're coming down now. It's going to close in 50 seconds. Will it take out that low? Will it come back up? You can maybe start to flip this green box to red, and then this could be ongoing supply going forward. If it comes up green into here, then maybe potentially continue selling. If it closes green above here, 23.28, that's where maybe I would look for that buy on gold. Okay, here's the drop now, 20 seconds to go on NASDAQ. Will it physically close below here, like how gold is moving below that box? Okay, so it came down, back up, came down, back up, 10 seconds. Back near the low. Get ready, guys. Okay. Right back down to the low. Coming right back up. Box is still green. Here's the close. Okay. Red, green. Flip. Coming back up. Okay. Bottomed. Here's your green candle now coming maybe for a possible retest of the 200 EMA. 50% of the body right there. The bottom of the red box. If they exhaust these buyers, gold could potentially continue to sell, but you see how it didn't break that previous low right here. Has not broke. So it is bullish ignited candle coming back up, but the 9 and the 200 could be coming down. Maybe could be developing a death cross on gold, and then gold will continue to maybe push and sell below this red line, 23.20, and start to drop down to yellow line, 23.16. That's about a 40 pip zone from red line to the yellow line. 40 pips is right in here. We've got still a green bullish candle, so nothing materialized down here for a possible sell on NASDAQ. We maybe are developing the higher low second leg. Okay, just don't look at that liquidity grab. Okay, pay attention to it, but look at the bodies right there. Our overall neckline is there, the high of the day. Then we came right back down. So if we're coming right back up, I know it's this ugly W, but if we can get some volume maybe there, maybe one more pullback and a good move, we could be potentially taking out that all-time high. Maybe going into power hour. But see how it came up again, lower high. Lower high, they're pushing it down again. So we got to continue to accumulate. 15-minute liquidity formed. Oh man, look at the 15 minutes. Okay, everything is 15s are uncertain, 5s, 30s. Okay, but look at how they flip the candle now. Now get ready, guys. This is a shooting star candle. 2 minutes and 30 seconds to go. If you kind of are looking for an impulse sell, that candle was green, 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 came up, lower high, they rejected it, came almost to take out the previous low. It was a shooting star candle coming down. Sometimes when they break, then it will drop and fill to that wick right there. So if you're looking for 10 pips, that's just from that wick to that wick. But we're not looking for 10. We're looking for more on today's, like, this is FOMC. Gold, very similar. Okay, there it was. Green, green, green. Retest 50% in there and then pushing down, and it's a shooting star. Gold is potentially going to sell down to that yellow line. Okay, maybe that's the next destination it needs to go. If we get closing pressure below that low wick right there, if this red body can physically close below there, we might push down to that yellow line. If it does it on this candle right now, NASDAQ is pushing down. Do we want to enter on NASDAQ on an impulse, or should we wait for this body to close? Like, believe me, I want to enter on an impulse, but I'm going to wait for this thing to close because that one in there, I got caught. I kind of don't want to get caught down here selling, and then it reverses back up. So we're still in the box. I know I'm on the sideline still waiting, but maybe I don't even look to take a trade. Maybe I save it for 3:15 or 3:30. In power hour, there might be better opportunities. Maybe we allow all of this to just play out, and then we see the markets later in power hour. Yeah, gold 2316. Yeah, that's kind of what I got. My 5 pence. This yellow line 2316.50. Yeah, right in there. That's that daily point of interest on gold. Okay, flip. Okay, so we took out again tweezer bottom lows with that wick. Now it's turning green, spin top. Holy shit! I have a headache. I got a migraine watching this. I'm gonna have to smoke something after this just to just to regain composure in this. This is this is crazy. Boring, actually, like really boring. Like, I love to scalp FOMC for small moves and this and that, but this is horrible. US dollars moving 104.66. It's moving bullish right now. Better boring than losing. I absolutely agree with you. Servando, you couldn't have said it better, my man. I'll take a boring session over losing money all day. Okay, but I can kind of maybe see a double bottom forming in here. Still holding structure, believe it or not. The bulls are still holding structure. 5 more minutes to go. Then we have 3 p.m. Let's just take a look at the hourly, okay, to clean everything up. Okay, gold, pretty clear on the hourly. We opened ignited FOMC, and it came all the way down to our hourly line right here. Last time we were there, 10 a.m., found the bottom, but a lot of selling volume this hour. Gold could continue to drop. That's why I have that yellow line right there, that daily point of interest at 23.16. And then our purple line low of the day is right there at 23.10. May come down there. Look at our hourly candle on NASDAQ. Oh my God. It opened that quick flip green, and then they brought it all the way down to that hourly white line right there. Now we're coming right back up. Oh my goodness. So this could, in fact, maybe turn bullish in power hour. But see the hourly volume, green, red, green, red. It's kind of contained right in here with liquidity grabs to the up and down. And then when you look at it on the 5s, this is how it looks. Coming up real nice and bullish. Here we go. Okay, so nice, maybe completing the second bottom, one bottom. The wicks are liquidity. Okay, nice bottom right there. Again, coming back up. Can it physically close somewhere important? Maybe pull back nicely and drive at power hour. Let's see if this plays out. And then when this, if this candle, this big green candle, wherever it closes, I'm going to locate where's half of it. Okay, because that might be the possible pullback in power hour, and we might continue to drive bullish. Okay, so wherever this candle does close, however it closes, I'm going to locate where's the exactly 50% of it when it closes. Still 2 more minutes to go. Who knows? Maybe it just came up there and it will come all the way back down and it's not a big bullish candle. 2 minutes is a long time to go. Okay, so what happened? We came up again up here. They're pushing it down. That, in fact, is still a lower high than the previous big bearish red candle. Now they're pushing it down. Where are the buyers? Are they here? Will they step back in? But if it starts to push down here, then maybe this could be an opportunity to sell NASDAQ during power hour on an impulse, or more importantly, if a red body candle closes below here, then we'll flip this green box to red, and then maybe power hour, maybe the market is selling down there, retesting this, and then dropping down there. Okay, 60 seconds go. So the buyers are bringing it right back up on that initial pullback. Buyers are asking to trade back up. Will it come back up to its high? There's the high of the candle right there. Okay, we're coming right back up. Right up to it. Okay, boom. New high on the candle. 45 seconds to go. Let's watch where it will close. Are we closing near the high? Will we get an ignited bar, start the momentum of power hour, and we're breaking a new all-time high? Any pullbacks, we're going to locate 50% of this. I'm already assuming open where the volume is now. 50% is maybe somewhere around there, but I'll adjust this as the candle closes. But for now, that's where I'm just leaving it. 15 seconds to go. It's a nice W. Looks like a nice completed W and double bottom. Here's the close. Power hour is now. Okay. Okay, so a little bit of a selling pressure. Again, green. Will it come down red to 50% right here? Or is it just going to hang here and drive back up to that? Again, if you're just looking, if it drives right back up to that purple line, it's about 18 pips. But maybe if it gets up there, it'll break for a new high. Maybe it will be like 25, 30 pips up there. Kind of hesitant to take it right now. Just the first 30 seconds of power hour. Okay, red. Are we going to see a red come down, retest this? No, it's coming back up. Sometimes if I take a trade now, guys, I only have like 5 minutes. If I'm in the open trade, I go manage it as I get out of here. But I only have like 5 more minutes to go with you guys. I got to go pick up my kids from school. I do scalp power hour on the 1 minutes while I'm going picking them up and grabbing them. But I don't know if I'm going to do it today. I just don't like how the markets are moving. Too erratic. Maybe I'll save some ammunition for tomorrow. Not today, Sherry. I think you got it right. Yeah. But we are building. Maybe we're going to get that nice new all-time high coming up here. Okay, so do you want to gamble on an impulse break? You can. There's 3 minutes to go on this. Or you can kind of like go down to the 1 minutes. This 1 minute candle is going to close in 10 seconds. So it's coming up there. It's testing the all-time high, today's high up here. Here it comes up. Here's the close of this 1 minute candle. There's the close. We open red. Even 50% of 1 minute candles, like you can locate 50% of a 1 minute candle. It's an ignited bar ready to break for a new all-time high. Is this going to be the candle that does it? Look at all of the heat up here. Look at all that heat up there. Like there's tons of heat waiting right there. So it's kind of triggered right into the all-time high. Got rejected. Now it might be building to break out of here. 30 seconds to go. Will we get a 1 minute candle that actually closes above a new all-time high? Looks like they rejected it. Now it's coming back down as a shooting star candle. Now it's coming right back up. Here's the volatility. 10 seconds to go into the close. Okay, there's the close. Pin bar, red bar, open up, red. Will they ask again to trade right back again at that all-time high? And will it actually punch out of there? Here it goes, okay? If you want to watch like on the fives, the 5 is building nicely. Has 1 minute and 40 seconds to go. Looks like it wants to punch out of here. But I know I'm being like patient here, but if it wants to break, it'll break for a new high, all-time high, and then I'll actually watch to see if the candle body will close above there. I don't want to just take an impulse and then it breaks for 5-10 pips and then gets a hard wick coming down, when I could have just waited now for 60 seconds and waited for this full 5-minute candle to close. So it's just you weigh the overall risk. Yes, it could break for a new all-time high, but it could also come down, get slammed down. Like what's happening right now. So that got rejected hard. It tested the all-time high, that 19,525, tested it and coming back down. Will it close with a little green volume, or is this going to be a red candle? Then maybe I'm going to look to maybe sell off of that big rejection of the all-time high and maybe start to collect some pips coming back down in here. But I got to wait for this thing to close because now it's coming back up green. Just going to clean up now these red lines. Ten seconds to go. Okay, so we retrace back up about 50% of the entire range of the candle. Close right there. Next candle, bearish, ignited, red, open. Okay, so they didn't even allow buyers to maybe push to fill that wick. It opened red. It's coming down. Are we retesting this neckline right here? Is it going to be a big bearish engulfing candle coming all the way down and start selling? So we know that they opened it ignited red. It got rejected off that all-time high. If it breaks here, I'm gonna look to take this sell right now, and I'm gonna place my stop. Maybe I'm gonna place it 5 pips above, no, 10 pips above the all-time high, and I'm gonna see if this will play out during power hour. Probably, and then if I can get it, I'm looking for it to break and come down and maybe test that hourly low. Like that's what I'm looking for out of this move. How many pips will that be if I can grab that? Well, I play each area. So the top of that green box would be about 20 pips. 50% of the green box would be about 30. The bottom of the green box would be about 40. Take out those 2 tweezer bottom low wicks, 50. And then if it can get that full fill down to there, it's about 50, 60 pips down there. But I'm in a sell, guys. I'm going to nurse this trade on my way to go pick up the kids. So I'm in a sell right now. I've placed my stop loss pretty tight, like kind of above 10 pips above that all-time high. Maybe it might come up there, they grab my liquidity and then push it back down. But I'm going to see if this sell can continue to play out down in here. Maybe the market needs to cool off down in here. But I'm in that And tomorrow, guys, the time we're back into the markets. Tomorrow, what is tomorrow? Thursday, 11 a.m. post New York, 11. We'll be in the markets, and join us tomorrow. And then we'll see, maybe after all of the market now digests all of this information, maybe we'll see how the markets are moving tomorrow. Hopefully this candle can close bearish engulfed below this bar, maybe a little bit below in here, and then we can maybe make some selling structure to allow this thing to maybe potentially push down a little bit. Sometimes you got to let trades breathe, allow them to develop. My stop is pretty tight, to tell you the truth. Like, I'm not giving it much room to breathe, but I don't want to be part of an all-time high breakout, so I'm just giving it 10 pips above. Kind of like where the heat is up there. I can see all the heat up there, so I got my stop inside that heat. Hopefully these offers will continue to absorb the buyers and maybe bring it down here. Okay, so I gotta go grab my kids, guys. It's getting late. I will see you guys. I might get stopped out like very, very soon, but my stop is right there, 19,535, 536, 537. I'll see everybody tomorrow. Thanks for joining. Not the greatest FOMC session. Like, the volume was really, really difficult, but we'll see if things open up power hour, and especially tomorrow once the markets are back to normal. Thanks everyone for joining. We'll see you guys tomorrow. I am in this trade. My stop loss is up there. Looking for selling pressure to push down in here. Maybe I'm going to get stopped out. Sometimes it happens where you get stopped out. They come for the liquidity up there. My liquidity, essentially. It's a stop loss, a hard stop in the market up there. Stop out, and then maybe it will reverse back down. I'm hoping not. I'm hoping that structure will build like a lower high in this area and then push down. But we'll see. We'll watch it play out. Okay, everyone, have a great evening. Thanks for joining. We'll see you guys tomorrow. Visit stocksnipertrading.com, and we'll see you guys tomorrow. Thanks, everyone. Everyone on Zoom, have a great day today. Thanks, everyone on YouTube. We'll see you guys tomorrow.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.